All right. Ladies and gentlemen, welcome here to the session. My name's Rodrigo. I'm going to be here with Chief Market Strategist Matt Maley, 40 years in Wall Street. He's been in Merrill Lynch, Salomon Brothers, currently Chief Market Strategist at Miller Tabak. A lot of you guys already know him from CNBC or Bloomberg. He's all over the news, but we're going to have a very special session here today. We're going to discuss trade ideas, education, setups, right? A lot of options. We're going to show you some trades that Matt has done with his members and how you can actually do them with us if you want to take it to the next level. All right. So I do think that we do have Matt in the background. I do want to give a couple shout outs here because we have a packed session. Huge, big, amazing shout out to Katie as always. Katie in the mix. Then we have Deron, Eric. What's up, Franco? We got G. Bicet, Jamaya, Paul. Peterson's in the house. All right, folks. So we have a packed group here, a lot of members here from what I can see in the Zoom chat and YouTube. Give me a 1 in the chat if this is the first time that you're watching these sessions. Give me a 2 if you've already been here before, if you've already seen some of these sessions that we do. They're pretty intense. I'm telling you, nobody else does what we do here. It's intense. We made it. We invented this whole format. And it's great for traders, right? All right, folks. All right, ones are coming in. All right, let's go ahead and bring on Matt because I know he's eager to get the ball rolling here. Give me 1 second, folks. Whenever Matt is ready, let's go ahead and bring him on officially. What's up, Matt?
Hey, Rodrigo, how are you, buddy?
Good, man, good. How is your weekend going?
It's good. Nice weather outside. It was a lousy day yesterday, and which was fine because there was a bunch of work I wanted to do because obviously we're moving towards the end of the year, which could give us a lot of volatility on a short-term basis. But plus, I worked a lot of work on my view of what's going to happen next year, and it's I think setting up for another volatile year. And I did catch a few football games, which was a lot of fun. And I'm sorry to say, watched a little bit of the World Cup game. The U.S. lost, so and I know we have people around here worldwide, and a lot of them could care less if the U.S. wins or not. So it should be a lot of fun though to watch that tournament as it progresses into the finals.
Yeah, I mean, there's so much stuff happening in the markets that honestly, man, like I could care less who wins that cup. I mean, there's so much stuff going on in the markets, and I mean, yeah, there's just a lot of opportunities out there to just be, doing that. I mean, personally, right? But I know there's a lot of people that watch these games and stuff. So, Matt, there's a lot of people that are watching here for the first time. I already know your track record. I mean, you're solid as can be. But for those that are here watching for the first time, if you don't mind, just giving us a quick introduction of who Matt Maley is, where you're coming from, all that stuff, and then we'll get into showing them how you're profiting from the volatility.
Yeah. Thanks, Rodrigo. What my background is a lot different than a lot of other strategists on Wall Street. In fact, different than all strategists on Wall Street, in that most strategists are either former economists or former analysts, sector analysts, and there's nothing wrong with that because they do study the fundamental backdrop of what's going on in the marketplace, the theoretical issues, what the market should do, what a group should do, what a stock should do. But as me as a former trader, and I'll tell you a little bit more about that in a second, but as a former trader, I not only try to figure out what things should theoretically do, but what they will do and how they, not what they will do over the next few days, but also the next few months, because the market is not always right. No matter what anybody tells you, the market is not always right. It's only always right eventually. And we've seen a gazillion times where the market has been way off base in one direction or other, or a stock has been way off base. It got way down too much. People got too negative on it, sold it way too far down, sometimes because of margin calls and things like that. And on the flip side, of course, we know that the market or a group or a stock can get way ahead of itself. And even though theoretically, it shouldn't be where it is. If you look at the stuff that I look at, it can tell you that it can go higher before it comes down. But the point is, again, I was 15 years at Salomon Brothers, And back in those days, in the 70s, 80s, and 90s, I wasn't there in the 70s, but I was there for 15 years in the 80s and 90s. Solomon Brothers was the most important trading desk on Wall Street, the biggest. I say not the biggest, but we traded the most money on the street. The number of people at the firm wasn't as big as one or two other firms, but we were the most important. We were the ones who committed the most capital, and I talked to the biggest trading desk from the institutional buy side. In other words, the biggest hedge funds, the biggest hedge fund, in fact, BlackRock, the biggest mutual fund, Fidelity, big, huge banks, insurance companies, et cetera. And when you talk to those traders, you really get an idea of what is going to happen over the near term. Now, we all want to have, that long-term bucket of investments where we got that 3, 5, 10-year or even longer horizon. But for those who want a little bit more active and trade a little bit more actively and really maximize the returns, you have a little bit more shorter time frame, and that theoretical stuff can be thrown out the window because we've seen many times where it's like, oh my God, theoretically, oil stocks never should have rallied 2 years ago, because everybody was saying that we're moving away from fossil fuels. Fossil fuels are dead, and we're going to go and just avoid the group completely. Well, instead, I was saying, pounding the table, saying, no, you got to own this group because we're not getting away from fossil fuels anytime soon. And so I used my background of trading, using technical analysis, using sentiment, using positioning on top of the fundamental backdrop to combine to really get a good idea of how what things are going to go, and over the shorter term, whether it be a few days or a few weeks, and even sometimes a few months, where you can really make some really big profits when the markets get out of whack. And that's where you make the most money, is when the markets, when a stock or a market gets way out of whack with its underlying fundamentals, whether too high or too low. That's when you make the most money. Now, after 15 years at Merrill Lynch, 15 years at Solomon Brothers. I was 10 years at Merrill Lynch, which is the biggest trading desk and one of the most important trading desks in the world. And it really, gave us that kind of unique backdrop compared to most strategists. And the thing that I'm doing now, and in the last 15 years, I've been at Miller Tabak and the chief market strategist there. And again, I talked to the same group of institutional customers. And I talk on a regular basis to, people like Carl Icahn, Lee Cooperman, some really big names out there, because they like my unique view. And again, I always want to have that long-term view, but for this trading strategy, it's something that's very unique. And one of the things I really love about what we're doing here with Benzinga is doing this kind of thing with individual investors now, and we've been doing it for over a year now, is that we have the tools. Individual investors didn't have the tools for years. Now we have weekly options. In the indexes, we have daily options, and we have ETFs, we have inverse ETFs, we have leveraged ETFs. All these things that were so much that the institutional players could plan all the time. In the last 4 or 5 years, these things have been around for 10 years or more, but in the last 3 or 4 years, they've become incredibly liquid, things that we can trade very, very well, and not have to take a back seat to those institutional investors. So that's kind of the backdrop that we have. It's been working out really, really well. And again, these times are very, very volatile. We'll talk about why I think the times are going to continue to be volatile, not just till the end of the year, but well into next year and beyond. And it's really going to be able to, again, with the tools now to take advantage of these things, it's something that's really become a great thing. Obviously, 2022 has not been a good year for a lot of investors. It's been a very good year for us. We've been able to profit from this volatility. So it's I'm glad you're here with us today. We'll talk a lot about what we do, especially in our chat room, which we have all day long, every day during the trading week. And it's going to be some more. This coming week's going to be another really interesting one. Last week was interesting. This week should be compelling, because we're kind of at a key technical level. I'm very bearish on an intermediate term basis. I think the market's go lower, but it may not go lower immediately. And we at some key technical levels. If it breaks out from here, we're going to make a bunch of bullish bets. If it rolls back over, we're going to make some serious bearish bets. So that's the great thing about what we do here, is that we're on it all day long, every day. So when the circumstances changes, we can change our opinion and jump right on it. And that's what we'll be able to do.
Right. No, absolutely, man. And if you want to go ahead and just share your screen there, Matt. Also, I know we follow Tesla really closely. I mean, it's something that everybody, okay, Eric, a lot of people asking questions there about the chat room. I'm going to put those the details there. But Matt, Tesla, this very recent, I know because I got a text and I verified it in the community of Tesla. They're sending out a $4,000 credit for anybody that takes delivery this month. So you're starting, do you think that's, tells you a little bit something about where Tesla can be? Because I know it's something that we trade continuously. It follows the markets. You've been following it very closely, precisely, even though some people that are, Tesla fanboys or whatever, you just keep it real to the charts.
Right. It's and especially on a short term basis. Boy, was it? Well, it was much earlier this year, and actually started a little bit late last year. And there were some people, saying, Elon Musk is a genius, and the stock's is not going to go. How could you possibly think the stock's going to go down? And I'm like, I am not arguing whether how smart Elon Musk is. I totally agree. He's a genius. But I couldn't understand how somebody could think that the stock couldn't go down. Given in the last 5 years, the stock has seen huge moves. I mean, there's no question it had a huge rally, but it saw major declines in the middle of that rally. Not just little ones. I mean, not just 5 to 10. I mean, 10 to 15% declines is a lot. Tesla's seen 40% decline. So anyway, my point is there's going to be a difference between the stock and the company and the stock. And so we made some really good calls. And some people really got mad at me. I'm like, I'm not saying anything negative about the company. I'm not saying anything negative about him. I'm saying something negative about the stock simply because it got way too far ahead of itself. And we were able to make some nice trades on both sides. And when it gets too oversold, I mean, just recently, we talked a lot about how the stock would get to 170. Sure, it certainly did. And the stock had become oversold. And but now, you see, the reason why I bring up the chart here, see how I drew this line? See how that was a key support level just above 200? Well, as the old saying goes, one of the oldest rules on Wall Street, old support becomes new resistance, and vice versa. Here it was, is that, geez, it got to that level, held that level here, at just above 200, came down close to it, and then rallied nicely. Came back down, held it, rallied again. When it finally broke it, that was really negative. So when it bounced back up to here, up near that old support level, I said, it's not going to hold. This stock's going to 170. Okay. And sure enough, it did. In fact, it went 168 or something like that. Now it's bouncing back up. So what's going to happen here? What are we going to do? All sorts of things could happen. If this thing breaks out above that it's about 200, but I say 201, 202, breaks above here, it's going to be a quick rally right up to this high at the very beginning of November, which was 237. Okay, that's a nice, you're going to make some nice money on those calls if it breaks above that level. It also could be looked now, however, if it pulls back down a little bit and then rallies again, that would be an inverse head and shoulders pattern. So you see, you sit there and go, well, which is it? What are you going to do? And I go, well, sometimes I don't know. I don't know exactly what's going to happen. So here we turn bullish because the stock had gotten oversold. Now I'm kind of in no man's land. I'm going to say, okay, whichever way this play is going to pull, it breaks above there, we want to be buying calls. If it pulls back here, I'll tell you something. It probably happens early next year or the very late this year. If this thing pulls down here to about 100, 185, 180, and then rallies again, that would be an inverse head and shoulders pattern. That would be even more bullish if it eventually breaks that level. But again, we're going to play this by ear. Right now, I'm getting more cautious. We'll just have to see how this news plays out early next week. Does people see this as something where, hey, they've just got an unbelievable they've got this backlog. They want to sell the autos, or is it telling us that that they're having problems, that the demand has come down and they're trying to they're desperate to reach their year-end targets? My guess is that. I'm worried that it's more of the latter. So, but we'll have to see how the market reacts to it. The thing is, in short-term trading, sometimes we have great idea what the market's going to do, or what a stock's going to do, or what a group's going to do. When I talk about groups, of course, that's when we use the ETFs. And sometimes I say, geez, this is a screaming sell here. Let's buy puts. This is a screaming buy. Let's buy calls. Sometimes, though, we sit there right in the middle, and we're going to let the market tell us what the next move is. And that's what we're doing right now in Tesla.
what did you feel about, I mean, I don't know really like how verified this is, but like, they found a successor or something like that for him for as a CEO in Tesla, or no? Or is that something that you're not really?
You know, just hold on a second. I just want to look at saying, we don't want a successor at Tesla. We want a successor at Twitter, so they can concentrate on Tesla. I guess is my point. So the oops, hold on a second here. Let me just hold on. Make sure I didn't equity. There we go. Here we go. Let's look at these headlines. Tesla drivers said Bill Gates would probably never be practical. Okay, blah, 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 blah. I don't see that news. Again, if we're talking successor, I have not heard that there was a successor to Tesla. If there's a successor to Tesla, not that it's negative. I want him to find a successor to Twitter, so that he can concentrate more on Tesla, because that's, don't get me wrong. I know he's going to have his eye on Twitter to a certain degree, but he can't run it day to day. You can't run both day to day. And he's going to make, I think he's going to make a bigger difference. Well, we'll see. But my point is that if he moves away from Tesla, that's going to be a slight negative for the stock, in my opinion. Although he'll never, completely move away from it. So we'll keep an eye on that stuff. But then I think if there's a news about him giving some control to other people, I think it would be on the Twitter side, which would be bullish for Tesla.
All right, man. No, absolutely. So let's go ahead, Matt. I know a lot of people here want to get a sense really of what the Matt Maley strategy is, how you use it, and what you've been able to do with it. Maybe we can go ahead and look at a couple trades so we can show the folks here.
Yeah, let me get, well, let's just talk about, first of all, what we had here on Friday. I was going to pull this up here. Okay, I'm sorry, Friday, of course, we had the big employment number that came out, right? Okay, here we are. So, and we just didn't know which way the thing would go. I mean, my feeling was that the market had rallied too much, they were expecting too much out of this employment report. The whisper, the number came, they're thinking about 220,000 new jobs. I'm sorry, 200,000 new jobs. But the whisper number, as they call it, that people were really thinking it's probably to come in light at about 180. And after the recent rally we had, I thought it was too much. So we came in, but I wasn't particularly absolutely sure. So what we did is we did a strangle. We usually just do mostly just puts and calls. We're not, we try to keep this as simple as possible. We're not doing condors and these big spreads and things like that. But every once in a while, we'll do a straddle or a strangle. And what that is, you buy, a straddle is you buy both a put and a call on the same asset with the same expiration date, the same strike price. The straddle is the same thing, only with a slightly different strike price. So, and what we did was we went in and we said, I think it's going to be bearish. We bought the TQQQ $23.50 puts. Okay. And and we also bought a smaller amount. So it wasn't an even strangle, a smaller amount of the TQQQ $24 puts. And the whole idea with any kind of a strangle or a straddle is that you expect one big event, which we knew the employment number can produce, is going to move it one way. So in other words, it's going to move it so much that you're going to make a lot more money on one of the options than you lose on the other one. And that's exactly what we did. We came in and we bought. We took it. Sometimes we'll do this when a company is about to, and we'll do it for an individual stock. If a company is about to report earnings, that's a good time to play those kind of trades. But this one worked out really well. When you see how it came down, the market. This is where the market closed. There was the TQQQ. I'm sorry, just to make sure everybody knows TQQQ. What that is the levered ETF on the QQQ. The QQQ is the NDX 100, the NASDAQ 100 index. Okay, and that has, it's not just the NASDAQ, it's not just the NASDAQ, it's the 100 biggest stocks in the NASDAQ, which has all those big technology names. So it's heavily weighted in technology. And I really felt that this was right for a pullback. Well, sure enough, let's start the TLT. You can see how it dropped. We'll just go percentage basis here. There's some things on my screen that you can't see that I, hold on a second. What did I do with it? Shoot. There we go, move it up. Okay. So you can see it opened down about 2%. Here it is. This is where it closed on Wednesday. I'm sorry, on Thursday. And this is where it opened, okay? Okay, so this opened down, I'm sorry, the QQQ opened down almost 2%. So the TQQQ opened down over 5%. You can see, if you can see that down there at the bottom, over 5%. Okay, so the options that we bought went up 146%, and we sold a bunch of them there. Didn't sell all of them there because I worried that there'd be some serious downside follow through. Later in the day, in here, it bounced back a little bit. We sold them for about a 70% gain. I'm sorry, I can't remember the exact number, but either way, but you can see we made a huge gain in these options that way more than made up for the sale that we did in the calls, which dropped, of course, dropped like a stone, and but didn't matter. We made way more on one than we made on the other, and that way we were able to take a situation that we weren't sure exactly what was going to happen, and still profited from it. And if it had gone the other way, and let's say the market had rallied in a big way, let's say we made 140% on the calls and lost a lot on the puts, that would have not been as good because we were much more heavily weighted to the puts, but at least we would have avoided losing any money. We would have basically broken even. In this case, we made money. Now, I readily admit we don't make money on every trade. We lost some money earlier in the week because I really thought that the Fed chairman's comments were already built into the market, but instead they did. The market rallied very, very strongly. So again, I'm not trying to tell you that anybody tells you they make money on every trade, they're lying to you. Okay, so but the whole idea here is to bat like 700 or 800. Batting 350 is great in Major League Baseball. It's not so great if you're trading in the trading community. You want to do, especially if you're trading options, you want to be trading. You're not going to win every time. You're going to lose money. You're going to have really tough days sometimes. But the whole idea is to minimize the losses, cut your losses quickly, let your winners run, and that's the way we try to play it. But let's look at some other. That's just one that just happened literally this past week. But I want to show you that it's just something that we didn't. Geez, oh well, you got lucky last week on one. But how about over time? Have you really been able to do well? And let me just pull up my. Oh shoot. No wonder here. Whoops. Hold on a second. Okay. I forgot to bring it up beforehand, but I will only take 2 seconds. So don't worry about it. But what I'm trying to portray is that this is something we've been doing for a year now, or over a year now, and we've been able to do it on a very consistent basis. We're getting some very big news now, very big wins. Now I want to start off with the biggest one back in March, where we made 5,000% on one trade, and again, that's not something we do all the time. But the point is that if when you're trading these meme stocks, hey, I made 40% in 3 days. That's fine. We've been able to make, sometimes we've made several 100% on many occasions, and in some cases even over 1,000%. I'll start here. I'm sorry again. I meant to have this up, and I usually do, but it'll only take a second here for it to come up. There we go. Okay. Now, those who've seen this before probably get tired of hearing it, but when you make 500% in a trade, we want to, obviously we want to highlight it whenever we can. And it's not the only one that's this big, but let's just talk about it real quickly. This was the FXI ETF on the China stock market ETF. It really shows you how we, we don't just focus on U.S. stocks. We focus on, we do have we spend most of our time on U.S. names, whether it be stocks, group ETFs, or index ETFs. But we made money in commodity ETFs like wheat, on gold, on oil. We've made money on foreign markets like this Chinese ETF. We made it on the TLT, which is the bond ETF, the HYG, which is the high yield bond ETF, et cetera, et cetera. We want to look at anything that can help us make money. We don't want to just focus on 4 or 5 meme stocks. Because in fact, I'm not a big fan of meme stocks. It's just, there's no rhyme or reason. It's just a bunch of people playing pump and dump. And it worked well for 1 year. For several months in 1 year last year, but not a game that I really play in. But we usually like to have a good reason for what we're doing. And here was a situation where China is, the Chinese market in 2021 just got clobbered, but they knocked it down themselves. I mean, President Xi and his, or Xi, how you pronounce it? I've heard it pronounced both ways. No disrespect in any way, but he was knocking down. He and the government, Chinese government, at once a month or once every 4 or 5 weeks, they would come in and clamp down on some industry. It started with Jack Ma and Alibaba, but it made it through a myriad of different industries, and it just knocked their market down. But as we got in the beginning of this year, suddenly it wasn't them that knocked the market down, it was the US that knocked the market down right here. They got clobbered, in February and March. That's when the SEC came in and said, we are thinking about delisting some of your stocks, and it just got crushed. And so you can see how it fell out of bed. Now, I've been bearish on the China market all the way down to here, but it got down to here. I was like, whoa, this is way too much. Forget this where it says last weekend's chart. That's when I made the chart back in March when it was going on. This was the most oversold. And again, just to step back for 2 seconds, just talk about one of the things we try to spend a lot of time in is education. Helping people, and we'll talk about a little bit later. We actually have a Zoom call, much like this one, goes about an hour each Tuesday to talk about some of these things. But we like to talk about education and telling people how things, what I look at, and what are the things that work in this active trading environment. This is what we call the RSI chart. This tells us, gives us good turning points when the stock gets very oversold or very overbought. In this case, you can see how oversold it got. See, look at the stock. Look, this is just a great example of how this works. Okay, whenever the stock, whenever the reading gets above 70, it's a red line. That's a stop. It's red for a reason. That means stop. Don't buy anymore. Gets down to the green line. It said, hey, it's oversold. Go ahead and buy. Well, look what happened to this stock. It got above its red line. Got very oversold. Sure enough, it sold off. Got down here, oversold. Sure enough, it bounced. Got here, bounced. Again, here, bounced. These are nice bounces. I mean, they're not small bounces. Okay. And again, oversold here, sold off. Here, look how ridiculously oversold it got here. Okay. So there's two things. I used technical analysis, okay, on the RSI chart telling us that it was way oversold, got down to 14. 30 is oversold. I'm sorry. 14, I only seen one other stock ever that was more oversold than this. That's number one. Number two, I just went on my experience of 40 years experience to know the Chinese government, there was no way they're going to let their stock market fall out of bed, especially with this year with the Congress, the Chinese Congress I knew was coming up later in the year. But more importantly, they weren't going to stand there, and that's one thing for them to knock their own stock market down. For us to be the reason to knock it down, I knew they wouldn't let that stand. They would lose face. They're not doing that. So I came in and said, we're going to buy some FXI calls. And sure enough, that day, got ridiculously overbought. The next day, bang, 24% rally, and 27% rally. Okay, and we had bought, like I said, we had bought. Well, let's just go right to it. Okay, we had bought on the 15th. Okay, on the 15th, we had bought, now say March 18, that's the strike price. I'm sorry, that's the expiration date, okay? So that was Friday the 18th. So on Tuesday the 15th, late in the day, we bought the FXI March 18th, $30 calls. Now, look, again, when we talk about these things, we get very specific. We don't just say, hey, China's getting really oversold. You ought to think about buying something there. No, we give specific trade. We're going to buy right now this exact, again, what asset we're going to buy, the expiration date, the strike price, and obviously whether it's a call or a put. Sure enough, we bought it here. Bang! We got the huge rally, and look at this. These things went up almost 3,000%. It opened 1,000% higher. Usually, you're making 1,000% more than 10 times your money on the opening. Sell it and get out. But in this, because if it would have been a meme stock, I would have said, let's just get out. Because we have no idea why it's up or down. It's just craziness. Here we knew why it was, and I knew that the Chinese government would keep buying. They wouldn't this wouldn't be something that rallied 1,000% and then went right back down 2 hours later. I knew that they were going to stand there and support it. So we stuck with it. Sure enough, it rallied more. But then when it got up 3,000%, I said, okay, we can't be greedy here. I do think it's going a lot higher, but you can't. If this thing rolls back over, we'll feel like complete morons. So we sold half. We sold half there, up almost 3,000%. At the end of the day, Same thing, it rallied like I thought it would, a lot further. Yeah, I wish I believe me, I didn't beat myself up because we got almost 8,000%. In other words, half here, half there, over 5,000%. It was it was a grand slam home run. Some people even held on for longer. And I did say in the chat room, hey, this could definitely go higher, but I'm not going to be greedy. I'm going to take it. Some people did. They said they made north of 11,000% on their money. So this is, again, I wish I could tell you this is something that we do all the time where we make these 1,000%. There was a trade the year before where we made another 5,000%. It was actually, we made 2,500 on half and 5,000 on the other. Was one of those meme stocks of Viacom. Viacom rallied, and again, it's RSI. Remember we talked about the RSI. Let's see. Oops. This RSI. Well, the RSI went the other way for Viacom. It got up to 97. 70 is way overbought. It got to 97. I said, this is ridiculous. We bought the puts in Viacom. Sure enough, the stock imploded. The very next day, it dropped 60%. And we made the combination of over 4,000. I'm sorry, well over 3,000% on that stock. We had another one this year, and Amazon is funny. I didn't participate in it. It's a good thing to note is that I give my ideas in the trades, but we have some great people in the chat room who really work together. They were talking about Amazon, and Tammy came in. She was saying, "Hey, I've done my work on Amazon. Every time it splits, the stock rallies, and the week leading to that, we ought to buy the calls." And I looked at it and I said, "You're absolutely right. The thing looks great." For whatever reason, I didn't want other positions, and I didn't want to commit to the trade, so I didn't. A bunch of other people, she did, and so did quite a few other people in the chat room. Sure enough, they made 2,500%, 2,500%. Okay, and of course, I was kicking myself the next day, but I was high-fiving them for making the nice money. But I just want to go show you here. Whoops. Okay, and just to show you, I'm going to kind of breeze through these, but SQQQ, that is, remember the TQQQ? Well, the SQQQ is the levered ETF on the negative side. And I'm just saying, in April, we made over 200% on that trade. Some other QQ, regular QQQs, again, that's April, where we made over 100% in a day. The VIX calls, now this is 82%. It's not 5,000%. You make 82% in just 2 weeks. That's pretty nice. That's pretty nice. Again, that was in May. Here's some May calls, some QQQ. We buy puts. Again, we make it on both sides. And when the markets are volatile, we want to take advantage of it on both sides. 215%. Again, I'm just trying to show you that again, I give the specific trade, the QQQ, May 2nd, $320 put option. We're not being vague at all. Okay. May, it's not May, it should have been May. But you can see SQQQ calls that we made here.
Right.
So you go on and on, but I just want to show also too that we do in some individual names. Whoops, because I want to get to the Apple trade. Here was Apple, same thing, made 400%. This was, again, something where we used my background and my knowledge just over the years. People were using Apple. Remember what happened in May when the cryptocurrency was first crashing, or not the first time, but one of the times it was crashing, they were getting margin calls. People they couldn't sell enough Bitcoin or enough cryptocurrencies to meet their margin calls. They had to sell what they could, what they owned. And I saw that Apple was getting clobbered, and I figured that had to be the reason, again, because what would cryptocurrency people hold? They don't Apple. They didn't own General Motors. They own Apple. And sure enough, the stock was down 10% for no reason. And I realized that they're using this stock as a source of funds to meet their margin calls. They're killing the stock, no reason. We're going to take advantage of it. On May 12th, when the cryptocurrency market finally stabilized, I said, this selling is going to be over because the forced selling, the margin calls are over. So we bought it late in the day. We bought the Apple, May 13th, $143 calls. By mid-morning, the next morning, we made 400%. So you can see this is something where we do it with individual stocks, not just this is the Viacom trade I was talking about with the relative strength. I don't know if I said that. The RSI stands for Relative Strength Index. I'm sorry. But see how that got ridiculously overbought. We made made almost 5,000%. This was the Amazon comment. Again, this was the trade that some people made. They actually later in the week made as much as 2,500%. And here again, individual stocks, Advanced Micro Devices. This is June. I don't want to bore you with all these different ones. Here was the one I mentioned in XLE, again, an index ETF in June. So you can see we've done it every month. We get several good calls like this. Made 470% on half of it, 560% on the other half. So obviously a nice 500% gain on some XLE players. That's the ETF for the energy stocks. So we're doing it in wheat. Here was the one we made 254%. WEAT, obviously, no, I didn't misspell wheat. That is the ticker symbol for the wheat ETF. And so where they, wheat had gone way up in the spring, came crashing down in the early summer. By midsummer, it became oversold. We came in and bought these calls and made a real nice money. Remember, I mentioned the TLT, which is the bond ETF. And again, it just LABU, 800% on the what the LABU is the leveraged ETF for the biotech stocks. So again, they're just going to go XLE, more stocks, et cetera. I don't want to,
right.
Bore you by going too many, but I hope it gives you an idea that we've been doing this in a very effective manner for a long time, and it's not just been, again, that FXI trade was an unbelievable. It wasn't a home run; it was a grand slam. But we still have a lot of other doubles and triples and whatever that it's not just once in a blue moon home runs, I guess is my point.
It happens a lot. No, I mean, it's not every day, that's true, right? But when they happen, you do enjoy them. You go out, you dance, you have a beautiful moment. Because it's definitely, I remember that day when my phone was blowing up, email was blowing up. Some people made some nasty money there. I'm not going to give out usernames, but they reached out and some interesting stuff there. I'm getting a lot of questions here, Matt, about the chat room. Let me just go over some of these, and then we'll get back here into the action here. 1 second here.
Sure.
1 second. Hold up. Porter's asking if this is a repeat. Maybe. Who knows? We have to stay and find out, my friend. All right. So let's go ahead and pop these questions. Thanks a lot for sending them, folks. I just grabbed, the most common ones. Give me a quick moment. Okay. All right. Does Matt Maley go over student trade ideas, member trade ideas? Yes. I mean, we just went over a couple from the members, right? And that's not even all. I know Tiff has done some great trades, shorting Target, and Ross earlier this year. Snapchat, huge winner. I mean, I remember, there's a lot of good members there that have learned basically a bunch of mini Matt Maleys. So yes, Matt Maley does go over member trade ideas. Are the sessions on Monday, Tuesday, Wednesday, and Thursday recorded? Yes, they're all recorded. They're all part of this special package that we have today. It's only for today, where we included the whole 9 yards with Matt. And okay, so yes, all of the member meetings will be recorded. No, we went over that one. The chat room schedule. The chat room schedule is 9 a.m. till 5 p.m. Monday to Friday Eastern time. Let's see, what is the price at renewal? The price at renewal is the same as it is today with the discount. It's not going to change. It's always going to stay the same unless you do want to do the lifetime, and I'll put that info there. Let's see, does Matt provide options education? Yes, Matt does provide not just options education, but overall market discussions that provide the education. It's not just about making money, but it's also about knowing how you made that happen. How much capital is required to do these trades in the chat room? Many of these contracts, calls, we're just buying calls and puts near term expiration. And these calls and puts go for about maybe 60, 70, 80, 90 cents in that range. We're not buying these huge, very expensive calls, right? And it's easier to manage. And that's how Matt wants it, because, he'll tell you, look, I'm starting a position here. It's small. And then he'll tell you, look, the position is a medium size now. And then he'll tell you, look, we got a full position here now. I'm very confident about this. So with his 40 years of experience, that is the way that, experience and Matt has been able to refine his strategy. That's why he's been able to make these wick trades out there. Let's see, we got a couple other questions here. All right, when are the meetings? Great question. All right, let me take a quick moment here for this. So for everybody that signs up here while we are live, what you will be getting is the following. Okay, I wrote it down because it's a lot. All right, so you're going to have a live Zoom call with Matt Monday, Wednesday, Friday at noon. Okay, that's 12 to 12:30, and you're going to get like 15 trade alerts a month just on that call. Market discussions, market education, all that sort of stuff, refining. Then separately in the live trading room, okay, in the live trading room, you're going to get, anywhere from 3 to 5 trade alerts a day from Matt. These are going to be options, okay? And that's Monday to Friday, 8 a.m. till 5 p.m. Separately, you're going to get a Zoom call, which is for the chat members, on Tuesday at 11:30 till about 12:30 Eastern. Separately, you're going to get like 6 stock swing trade ideas per month via email with entry and target price. And you get the ongoing coaching and mentorship and market education from Matt Maley. This is a one-time package that we're doing here. It's $19.97 for the year. We put the link there in the chat. Margot, I just went over how the alerts are sent via email. The other ones are in the call. I'm going to post that in the chat as well if you are listening. I'll post that so you guys know. And okay, I think that kind of covers everything. Matt, I do know that you, for those that are not familiar, right, you provide institutional research, institutional quality research to firms, right? That's you started as a trader, you morphed into an analyst slash trader, one of a kind, and that's pretty uncommon because most of the times, you meet an economist, they're an economist. You meet an accountant, they're an accountant. Like everybody's in their field, but you've kind of dabbled in both of these fields, and which I'm pretty sure helps you as a trader. What do you think are the benefits here for new traders to join this chat room?
Yeah, well, the biggest thing, and I'll be two, but the biggest thing is if you want to trade, don't trade alone. There are a very, very small number of people who trade alone and do it successfully. It's a very difficult to do, and it's very unique to do. And I'm talking about a real small handful of people, not several thousand around the world. It's really tiny. But think about this: the biggest hedge funds, the most successful hedge funds in the world, these guys who are trading professionally, day in and day out, and they've made lots of money over the years. You know what they do every day? They have, in some cases, they may have 20 guys sitting in the same trading desk, all talking to each other every single day. Some of the other firms aren't so big. Maybe they only have 2 or 3 or 4 traders, but they're talking to each other all day. And guess what they're doing? They're talking to traders from all the big and small brokerage firms all over the street. There isn't a trader at any of these hedge funds who isn't talking to 20 guys, 50 guys, at least 20, 30 or more guys every single day about what's going on in specific stocks, groups, the overall market, what's going on in other markets, how's that going to affect this? Is there a big move in the dollar? How's that going to affect my group, et cetera? And how, they do not trade alone. How in the world are the best and most sophisticated traders in the world? How are you going to fare against them if they're talking to a bunch of people all day long and you're just sitting there by yourself? I love financial networks. They're great. They're the people on them ask really good questions, but most of the people they interview are kind of paid to be bullish. I mean, that's kind of their job. And if you're working at a big fund manager or you're working at a brokerage firm, then they're always trying to give you at least I mean, none of them are going to tell you there's a recession until we're in the recession. I mean, let's face it. And I've been saying all year long, the economy. I was saying way back in March. I'm sorry, way back at this time last year, raise cash. The market's going down next year because the Fed's going to tighten. It's going to go down a lot. But those people, they can't do that. They have to, well, we might have a little bit of 5 to 7%. And then when it gets down 5 to 7%, they say, oh, maybe it could go down 10, a little bit more. And then when it goes down 10%, they say, oh, well, maybe we'll get down. We won't have a bear market. Don't worry. We won't have a bear market, but it could go down. And then when they get to a bear market, well, it won't be any worse. That's how they have to play the game. It's because they can't be speaking negatively or their bosses will yell at them. Okay. So all these traders, the experienced traders, and again, I'm not just the hedge funds, they're the best mutual funds, the best insurance companies, they're talking to traders all day long. That's what you want to be doing. And that's how this chat room becomes so helpful. Because like I said, I'm not the only one giving ideas, and I'm not the only one. I mean, once in a while I'll say, there was, which was it just last week, but there was something popped up and what had to do with gold. I had been talking about gold. Hey, it looks like gold, it's a nice setup. And I missed that it had broken the key resistance level that I had mentioned. And he said, hey, Matt, just broke GLD, the gold just broke that key resistance level. I was like, thanks for the heads up. Here we go. We got to buy the GOLD, which spells the word gold, but that is the symbol for Barrick Gold. And that stock's moved up. And we're going to talk about gold because it's getting a little overbought near term. I'm not going to chase it here, but we're looking up for another setup to go higher. But the point is, we're reminding each other of things. I was the one who talked about it, but I am, again, we're all real busy. You're looking at a bunch of different things. And all of a sudden, the stock either breaks out or breaks down. You don't notice it. You have somebody there to tell you, hey, this is the one I know you liked. Let's act, let's go. And then you say, hey, Matt, it broke that level. You haven't talked about it in 2 weeks. It just broke that level. Is it still good? And I'll say, actually, no, something's changed and we're going to, or say, no, absolutely. Great heads up. Thank you so much for highlighting. Let's get in. But people are talking to each other all day long, but we're in a nice chat room. This is not 30,000 people where 100 of them are guys who are claiming to be individuals who are really working for a hedge fund who are trying to pump and dump something. Okay, we're not doing that. We're working with each other. We know everybody's. As Rodrigo will tell you, we know who all the people are. This is not, some clown trying to pretend he's trying to pretend he's something he's not. Okay, and when we do the trades, hey, I'm doing the trade right now. This is what we're doing. And I don't do a trade, let it run up and say, hey, you want to buy it so I can sell it to you, pump and dump. No, that doesn't happen. When I get in, when I get out, and other people in the chat room are giving us the same things to say, hey, I'm taking my chips off the table. I made a nice run. I had a nice little run here, and I'm taking my chips off the table. But talking to people on a regular basis all day long is just a great way. Oh, by the way, and we didn't mention this either, is that we have this chat room. You're scrolling all day long, but we also have a separate little page that tells you, it says Matt's important messages, where I put all my trades in. So if you're off, if you're not watching, you have to go do something. You take an hour to go, do whatever. Take your dog to the vet. But many people on the site have full-time jobs, so they're in and out. Well, what if I do a trade? I have to scroll through 45 minutes of posts to figure out if people are trying to do a trade. No, I put it in a separate page. You can just punch on that page and say, oh, okay, 20 minutes ago he did this, and then I'll go back in and then these people can come in and say, hey, Matt, you put this trade on 20 minutes ago. Do you still like it? Yes, I do still like it. Go ahead, whatever. So there is that other page. That's just a side point. But again, working with other people is just what all good traders do. And when I say, you ever hear about one guy who's sitting, who's just, his IQ is 3 zillion, and they're looking at a bunch of different things. But boy, if you don't hear what's going on in the street and getting ideas from other people, getting other points of view, because we so often, even the best and the brightest, get so caught up. And look what happened to some brilliant people in the crypto market this year who got too one-sided. They're not listening to the other side at all. We want to be able to do that. And the other thing, of course, is the fact that I, as a former trader, and again, I have a view with, there was one particular well-known, guy who was a very, very smart guy. And he's helped a lot of investors over the years, but he's a college professor, and he's been pounding the table. He spent so much time all year saying the Fed's doing the wrong thing, the Fed's doing the wrong thing. And that's fine. And I'm not saying he shouldn't say that, but what he was also telling people is that the market's not going to go down a lot more because the Fed's going to have to change. And I'm like, he was basing that on what he thought the Fed should do, not what he thought the Fed would do. And that's what I focus on. I don't focus on what the Fed should do. Believe me, last year in the summer, beginning of summer 2021, I was saying the Fed has got to start tightening now, or at least pull back on their QE program, because the emergency is over. But it was like, I know the Fed's not going to do this because they're telling us, no, inflation's transitory. Inflation's transitory. They were wrong. They were dead wrong, but it didn't matter. I knew that the only way the Fed was going to change it would be very, very gradually. Okay, not quickly. And that's exactly what they did. The same thing's going to happen the other way. So all these people who think that, the market's going to, that the bottom is in because the Fed's, all they've done is going to pull back on the size of their rate hikes. They're still tightening. They're still tightening aggressively. 50 basis points is a lot, and they're still shrinking their balance sheet. We'll go on to that a little bit more when we talk about my view on the market. But I'm just telling you right now, working with other people and working with people who don't deal in the theoretical stuff. That's my expertise, is that I'm following, yes, the theoretical fundamentals, but I'm also looking at the technical analysis, which is based on fundamentals, by the way. And every single great hedge fund manager, great trader of the last 40, 50 years, certainly the last 30 or 40 years anyway, it uses technical analysis extensively. Some people say it's mumbo jumbo. That's fine, but I'm telling you, it's helpful. Very few people use it solely. They use the fundamental. They use all sorts of different things, but they use it because it helps. It helps in a big way. So we use that. We use positioning. We use sentiment. All sorts of other readings to pull back what's going to happen over the short term, so we can take advantage of this volatility and not be prisoners of it. Most investors have been prisoners of it this year, and obviously they're down a lot. And they're like, well, a lot of my other friends are down a lot. Well, that's fine. We're up. Okay, so we're up this year, and I'd moved most of my long-term portfolio into cash at the beginning of the year. That worked out very well, and the trading thing is profited quite nicely. So that's the real big advantage. Maybe now I just see we've been talking for almost an hour. I do want to talk about just my view of what's going to happen, what we need to look at right now, and the stuff that again on a short-term basis. Let's just pull it right up here. I'm going to pull up the S&P 500. We're on a short-term basis. Anything can happen. Next week should be important to tell us whether we're going to rally further into the end of the year. And those people, and don't listen to those people who say it's a midterm election year and therefore the market has to rally into the end of the year. That's like, what are you talking about? First, and one person flat out said it has happened every single time since World War II, midterm elections. I was like, what are you talking about? The last midterm election did not see a rally. It went down 16% from election day until Christmas Eve. So how in the world, and of course, it rallied a little bit after that, but it still was down. So how somebody could say that every midterm has been followed by a rally is crazy. And my point is that when you're in a bear market, which we are obviously in, the vast majority of the time, the month of December is not a great month for the stock market. The stock market is usually down, and at best sideways. Every bear market since the 1970s. I didn't go back any further than that, but that has been the case since the 1970s. So what we're looking at right here, this is what I'm going to be looking. Obviously, a lot of people have been focused on, and rightly so, the 200-day moving average. That's that purple line, right? Remember the RSI that we talked about, the relative strength index? That's getting overbought. It's not wildly overbought, so I don't want to get too, but see how it didn't get wildly overbought here and then rolled back over, okay? But it got just above the 200-day moving average. Say, well, wait a minute. If it broke above the 200-day moving average, that must be bullish, right? It's like, no. One of the key things to learn, of course, in the educational part of things, whenever a stock, an index, an ETF, whatever, a currency gets above a key resistance level, it has to get meaningfully above it. If it just gets slightly above it, it can frequently be a head fake. So we want to make sure it's a meaningful break of a resistance level. The same thing's true on the negative side. If it gets down to a support level, if it breaks just a little bit below it, that's not a time where you say, oh my God, we got to sell everything. You need to see a meaningful break, and especially one that lasts for more than a couple of days. If it's just a few days, it can easily give us a head fake. And look what happened at the beginning of this bear market. See how we got slightly above it at the very beginning of the year, and slightly above it again in late March and early April, and it rolled back over. This time we got right to it and rolled back over. Now we're getting right to only slightly above it, less so than these two. Is it going to roll back over, or is it going to take off? If it breaks, higher, if it breaks much above last week's intraday highs, you got to think that this thing will make a very quick run to 4,200, and maybe even up to the August high, not the old highs, the August highs. So we want to stay very, very nimble. And I'm going to explain why I think the market will roll over eventually, one way or the other. But so what I'm be looking for here is now, okay, let's forget about that. That's the resistance. On the support side, let's look at the 100-day moving average. That's the green line in there, okay? Now, see how, this is not a major line, but see how it got right down to it on the 17th, right down to it, or very close to it last week, and bounced both times. Now, so if it comes back over for whatever reason, and this could be a lot of different reasons, if it rolls back over and breaks below that line, that's going to be a concern for me. But it's like, wait a minute, the 100-day, it wasn't that big a deal in here. It was more important back in here. Is it going to be? Well, no, not necessarily. The 100-day moving average usually isn't considered a very important one. But I'm going to consider an important one this time, because we always want to see whenever something breaks down or breaks out, that there are several different things that are going into play. In this case, the 100-day moving average would also take it below its trend line going back to the October lows. See that? I'm just going to get rid of the 200-day. It's just so it doesn't. You see how? So that's we break down here. And again, that number is 39.26. We break below that in any kind of meaningful way. Again, it has to be more than just a few pennies. But that's gonna give me a concern that this stock that the market's going to roll over. Now, we have so many different. They're all kind of the same. The NDX, which is of course is the Nasdaq 100, as I mentioned earlier, same type of thing. Okay, this is for this one. It's the 100-day moving average. Okay, two, boom. Let's get rid of that volume. See how it bumped up against this 100-day moving average? So for the S&P, it's a support, and this one it's resistance. So we're sitting right at that level. If it can bounce more from here, it's going to be quite bullish. However, and then look at the SMH, the semiconductor ETF. Oops, it's not index. It's okay. Hold on a second. But the semiconductors, okay, the chip stocks. This is the most important leadership group in the business, in the marketplace, okay? And it has been for decades. See here? Again, same type of thing here. We're bumping, see how it's, again, well, let me get rid of some of these lines so it's not ridiculous, so busy. The chart gets so confusing when you got 8 million lines on it. But see how it got slightly above the 200-day, slightly above the 200-day, couldn't make it. Now it's bumping up right against it here. Didn't even quite make it there that time. What's it going to do? Is it going to break out? If it can, that's going to be very, very bullish. If it breaks down, it's going to be a big problem. Now, this stock is playing on an overbought level, so we have to be careful about it. Now, let's talk about the some further educational things. What we're looking at right now is the MACD chart. Okay, and this is not something that tells you it's overbought, oversold, but instead it tells you. Okay, let me just redo it here. Hold on, take 1 second. Okay. Come on. MACD. Okay. Now, to review, what it does is it tells you that if something is changed in trend, it doesn't give you a top. Once it rolls over, it tells you that this rollover is going to continue. It's not just a mild rollover, because let's say great bear markets, great bull markets, they rise, but they'll have little dips, and then they go higher. When the MACD crosses after it's make a top, it tells you that, ooh, this dip is going to be a bigger dip. It's not just going to be a mild one. Let me just take some of these, again, get rid of some of these lines so you can see it a little bit better. I'm going to widen it out. Hopefully you see a little better there. And adjusting screen good. Oops. I wonder. There we go. And let's just remember that. Okay, here we go. So you see again that 200-day moving average. That's the purple line. But see how this MACD. Okay, then what is the MACD cross? It tells you, it gives you a change in momentum. But what it is they take the 12-day and 26-day exponential moving averages and subtract it. They take that number and plot it against the 9-day moving average. And whenever you get a negative cross, that shows you the momentum is turning down. Whenever you get a positive cross, it means momentum is turning up. And it's kind of like a lot of you have heard about a death cross and a golden cross. A golden cross is when the 50-day moving average crosses above a rising 200-day moving average, and a death cross is when the 50-day crosses below the 200-day. In this case, it's a much shorter time frame. Okay, we're not going 50, 200 days out. I mean, the 50 days is 3 months, about 3 months. 200 days about 1 year. This is just going a couple of weeks. Barely 2 weeks. But you can see what has happened. See when it's seen a negative cross, when it's seen a meaningful negative cross. So I'm going to have a cross there. Okay, a meaningful negative cross. Look how big that sold off. Negative cross here, sold off, big way. Negative cross here, sold off. So you can see, and of course, positive crosses have been very bullish, right there. Again, we've seen a couple little head fakes that aren't, see this thing right here, that meant nothing because it wasn't a meaningful move. Again, in technical analysis, you always want to see more than just a few pennies. Here, it's not there yet. But if this thing crosses down and it fails at that 200-day moving average, this is going to be a big problem. And the market's going to sell off. So I want to stay very, very nimble next week. Going into the in the chat room, we talked about what we had. I did buy some small number of puts. that we had. After we made that nice profit on Friday, I took some of those proceeds from that and bought some puts. I do have some puts that expire on Monday, and the QQQs, because they expire. Well, actually, they expire every day. They have options that expire every day. They have ones Monday, Wednesday, Friday, the most liquid. The TQQQs that we mentioned only expire every week. I have some of those too that expire next Friday. But they're not big positions at all. And we'll see how the market looks tomorrow morning. If it looks like it's going to roll over again, I'll add to those things. Because if this thing breaks down, if it fails again at that 200-day moving average, it's going to be a big problem. If it looks like it's breaking out, I'm going to sell those puts and buy calls. So we're going to be very, very nimble next week. Now, so that's, again, give you an idea of why we're doing. The other thing, too, I just want to show you that, well, let's see, we should really use what we trade, which is the QQQ. Instead of showing you the NDX, which is what the QQQs are, let's look at the QQQ, because that's the ETF that we trade those options are. Oops, hold on. Sorry about that. Just like it. Again, that green line, the 100-day moving average. But again, see, it started to curl over, but didn't break it. It hasn't broken out yet. Market acted well. Don't get me wrong. We had a nice rally here on Wednesday, but it didn't break to a new high. Sold off Friday morning, but then bounced back, closed much closer to its highs. That bodes well. Maybe it will break out finally. But if it doesn't, it starts to pull back and we get a negative cross. Again, look at that negative cross. It was a head fake because it didn't become a big one, right? This is the MACD chart. But when we do get a confirmed cross, see what happens? Market sold off. Here, confirmed cross, market sold off. Here, confirmed negative cross, sold off. So we're going to be watching very, very closely. If this thing becomes sell-off, we could get that big, kind of, believe me, most people, even there's a lot of, Mike Wilson, who's had some great calls this year, many great calls this year at Morgan Stanley. He's still looking for the market to rally into the end of the year. So, and even people who are looking for the market to turn down next year, as he is, they're going to be surprised if this thing pulls up. So if people are going to be caught offside on a near-term basis, the biggest pain trade is going to be to the downside, not to the upside on a short-term basis. Again, like I said, everybody's saying, oh my God, everybody's bearish. The market can't go down. I'm like, actually, no, people aren't all that bearish till the end of the year. And if they were really bearish, the way people are saying, the VIX, VIX wouldn't be trading below 20. I mean, look how the VIX has come down. Those who are not familiar with it, that's the volatility index. But it's right back down where it was at the August lows, right? Right, the August lows, when everybody thought well, not everybody. So I certainly didn't, but some people thought that the bear market was going to, that the bear market was over and that the market was going up. And so to say that there's a lot of bearishness out there is ridiculous. On a short-term basis, it ain't out there at all. I know there's a lot of people bearish longer term, and I think for the right reason. But if we're going to get a surprise in the last 3 weeks of the year, it's going to be a sell-off, not a rally. If we're going to put better, if people are going to be caught off guard with their positions, it's going to be a sell-off, not a rally.
Right. Really quick here, Matt. We got a lot of new inflow here of people that are asking about, does this man have some trade alerts or something we can follow? So I'm just going to recap here really quick. The Matt Maley, the special here that you have, and then we can get back here into the session. I know we're somewhat limited on time here, so we'll just try to, do this as quick as possible. And if you do want to follow up with Matt, you can do that. All you have to do is join the chat room. It's that simple. Okay. So, so this is how it would work for Matt. You're going to have a meeting Monday, Wednesday, Friday at noon, and you're going to get like 15 trade alerts a month throughout all those sessions, right? 3 times a week you're meeting. Separately, you're going to have a live trading room with Matt, in where he will give about 3 to 5 trade alerts per day. That's Monday to Friday, 8 a.m. till 5 p.m. Eastern. Separately, you will have a live Zoom call for Tuesday, 11:30 to 12:30. Okay. Again, we're talking 4 calls with a chief market strategist, 4 calls a week, plus 8 to 5 p.m. Eastern every single day. Separately, you're going to get 6 stock trade ideas that are swings via email. You're going to have an entry, target price, all that stuff. And you get the ongoing coaching, mentorship, market education. This is not the regular chat room deal that we have. This is a one-time only that we're doing here with Matt. Basically, you get everything that Matt has, right? The whole 9 yards. We've never done it before, but we're doing it just for today, for Sunday. So if you do want to join, the link is in the chat. We're posting it in the chat. Liz, John, Frank, all you guys that are asking where to join, how to join, I'm posting that in the chat room now. Yeah, we're good now, Matt.
Great. Okay, good. I just perfect. And I just want to go. I'm going to talk a little bit more about just to give you again. Sometimes these things put so many darn lines on here, and because I look at this stuff every day, and it doesn't. So I understand it. Again, I'm not saying people don't understand it, but when they're not used to looking at it. But see how we're right there, right here, and that this is where the market has bottomed. I'm sorry, the market has topped in all the rallies we've had this year. The VIX has gotten right to this area. See how it's very oversold, got right to this level, and then skyrocketed. So be careful. And when the VIX runs up, the stock market goes down. So, or actually, the market goes down first in the VIX. But my point is, it just tells you that there's a lot of complacency in the marketplace, despite what a lot of people on Wall Street try to tell you. And just go back on what Rodrigo was just talking about. Yeah, it's I'm very, very passionate about the markets, and I love talking about this stuff. I hope that that's coming through today. But and the other thing that's very, very important was we're in the chat room. And I haven't said this enough in the chat room. I need to say it more often. I did say it a lot for a long time, and I haven't said it more recently, is that there's no such thing as a stupid question. None. Okay, I'm learning. I've been doing this 40 years. I'm learning new stuff every single day. So, and the thing is too, if you're not used to it, you could be, I don't care how smart you, I mean, you could have the highest IQ in the history of the world. If you don't know something, if you've never been told something, how are you going to know? Some things you can't figure out. You have to know it. I mean, and I mean, there's just sometimes it's like if you're from overseas and you don't know anything about American football, I don't care how smart you are. If you've never been told the rules, how could you know what they are? It would be impossible. So don't be afraid to ask a question. Nobody's going to think you're stupid. They're going to say, "Hey, I'm just trying to learn." And people are, and sometimes I'll answer something, and somebody else in the chat room will say, "That's correct," but here's another way to look at it, and maybe simplifies it a little bit more. And I'll do the same thing to them. Somebody else will give an explanation, and I'll try to simplify it just to keep it going. And sometimes people say, okay, thanks for the explanation, but I still don't really get it. Don't be afraid to ask. I really do need to push that more, because there are many things that are counterintuitive in the marketplace. You say, well, one of the things is like, well, if everybody's bullish, that's good, right? Well, actually, no. For those of us who've been in the business for a long time, we know that when too many people get on one side of the boat, that's negative. I mean, if too many people become really bullish, that's negative. If too many people become really bearish, if too many people get really negative, that's bullish, when not bearish. When too many people are bullish, that's actually a negative sign. And the reason is that if everybody's bullish, that means everybody's bought it. There's nobody left to buy. So the thing has to come down, at least on a short-term basis, no matter what, even if the fundamentals absolutely positively tell you, 6 months from now, it's going to be higher. It still might go down next year. I mean, look at 2021. The Apple computer had an unbelievable year, as did the whole stock market. Well, guess what? It still had 4 declines of anywhere from 9 to 20%. And we caught a couple of those, okay? So it caught most of those, actually. So nothing moves in a straight line. We all know that in the marketplace. And so these are the types of things that may necessarily, if you're not familiar with it, wouldn't necessarily know. So don't be afraid to ask. I kind of got, I didn't want to get too far off on that tangent, but the point is that if you don't know, you can't learn if you don't ask. And like I said, people in our chat room are going to say, they're going to help. They're going to be very. I'm going to be helpful. People are just. It's a good team of people, and they're really trying to help each other out. And it's no such thing as a dumb question. Anyway, going back to what we just talking about next year, and I just think there's just again, and I don't want to take up too much time on this, but we have to look at things on a perspective and one of the things that I pushed very hard, and one of the reasons why I turned very bearish right at this time last year, I said the Fed's about to change their policy. This is going to be very important. I just couldn't believe the way so many really smart people on Wall Street were saying, don't worry about it. Interest rates, remember this time last year? Don't worry about it. Interest rates are still really low. It's not that big a deal. Don't worry about it. The markets still go higher. And I'm like, They didn't understand that what the Fed did, which they had to do, the system, we were staring into the abyss. Okay, people, the market was on the abyss of going in, financial system breaking down just as much as it was in 2008 for different reasons. Now, the banks weren't falling apart or anything like that. But when the economy had all but completely stopped, especially the fixed income market had basically stopped working. There was a story that one major firm on Wall Street stopped trading and overnight trading, would not trade some treasuries. I mean, they wouldn't take the risk of trading a treasury. I was like, are you kidding me? A U.S. treasury? That's how much we were looking at the abyss. And that's why the Fed had to provide all that liquidity. The problem is they kept it on. When the emergency subsided, they kept the emergency level of liquidity out there, and that caused a massive bubble. It took the stock market way above anything that could be justified by its underlying fundamentals. Therefore, now that liquidity is being taken away, the pain trade has got to come down. And I think it has to come, history tells us it has to come down more. And again, we all know, we saw what happened, okay? The markets, everything went down, okay? The economy was going down, the markets went down in 2020. Then all of a sudden the Fed jacked things up. And we all knew, I mean, nobody, you're stupid. You're like, hey, the economy, the global economy is all but shut down. We know the stock market shouldn't be up here, but thankfully they're providing liquidity, and then eventually the economy will pick. The pandemic will pass, and it'll catch back up. The problem is they kept the liquidity too long, so as we caught up, it could never fully catch up because they kept adding liquidity. So what happened? So now it was inevitable we were going to have at least a deep correction, and then and because we were going to have inflation because of what the Fed did, but it was much more because of the invasion of Ukraine. And therefore, food prices went up, oil prices went up, supply chain breakdowns took place, but it's really food and energy prices went through the roof. That made it much worse. But the point is, everybody tells you about, oh, this happens here, this is what usually happens in a market bottom, this is what usually happens in a market bottom. The one thing that they never mention when they say that, the perma bulls on Wall Street, is that every single bear market, and especially the bear markets that included recessions. We've had a couple of bear markets that didn't have a recession go with it, but every single one, every bear market, whether we had a recession or not, and especially the ones that did have a recession, which I think we'll have. I don't think we're a chance we have a soft landing, but we'll see. Has not stopped going down until the market became cheap. Okay, this market is not cheap. It's trading at 18 times earnings, 2.4 times sales. 2.4 times sales. You can't fake sales, okay? You can play around with your earnings and take write-offs and things like that and make your earnings look better than they really are. But your sales are your sales. Unless you're flat out lying about your sales, which people go to jail for that, the price to sales is what we usually see at market tops, not at market bottoms. So the market is ridiculously expensive, not just kind of expensive, ridiculously expensive. Now, it's not as expensive as it was at the beginning of the year. When we look at PE ratios, it's trading at 18 times earnings, 18 and a half times earnings. That is very high, especially with interest rates moving back up. The only way you can have the kind of valuations we had in 2021 is when you have massive levels of liquidity, okay? QE type, it doesn't have to be a QE program, but there are other ways to provide liquidity. And said the only other time it's been that way was actually more overbought and more extended in terms of valuation was the late 1990s. And people say, well, what was the liquidity in the 1990s? Well, it was there. It was behind the scenes. It was not a QE program, but behind the scenes. And it was there in a massive way when the Fed and the other global central banks provided liquidity to make sure the Y2K issue did not become a problem, because it was going to be a serious, serious problem. For those who are not familiar with it, look it up, but it had to do with it in 2000, on January 1st, 2000, all the computers in the world were going to go from 98, 99, 00. The problem is those computers were going to think, instead of 2000 00, they were going to think 1900. So anybody who had money in the bank, their money would have disappeared. Poof. All sorts of different things. The thing is, they knew this way in advance, and they spent many years and billions of dollars fixing it, and they got it fixed in time. Okay, but once the thing, a month into 2000, and in early February, there's no surprise that's when the markets start rolling over, because they didn't need liquidity anymore. They knew that they had fixed the system in advance. They kept the system from having major catastrophe, and they pulled the plug, and the markets went down for 2 years. The S&P, I'm sorry, the NASDAQ went down 80%, And stocks like Amazon, whose revenues and profits went up every single year during that time, stock went down 90% because it got pushed way too far. Now, I'm not saying the stock's going to go down 80, NASDAQ's going to go down 80%, or that Amazon's going to go down 90%, because the stock market didn't get to 35 times earnings. It got to 30 times earnings that it got in 2000. It got to 22 times earnings. But the point is, every single stock market, bear market, does not bottom. That means if earnings stay the same, okay, earnings forecasts stay the same as they are right now, and they're just now starting to come down. The stock market the S&P has to drop to 3,400, well below its lows for this year. If earnings come down, like I think it will, and a lot of people are starting to throw a 200 number on that on the S&P 500. The consensus right now is 230-ish, down from 250. And now it's down to 230. But there are people like JP Morgan, Morgan Stanley, they're talking about 200 or even a little below that. That means the S&P's got to fall to 3,000 to 3,200. And that's, because that's just to get to fairly valued, forget it to get undervalued.
Right.
The pendulum always swings the other side. So we are going to see a lot of volatility next year. And we're going to see a lot of what we saw this past year, again, next year, in both directions. We want to take advantage of it. We've taken advantage of it this year. I think we're going to be able to continue to do it in 2023, but we got to stay nimble. And we have a group of people in a chat room like we're using right now. That's going to work really well.
So Matt, I guess for example, let's say for new traders, right? Maybe they will, like, for example, they'll turn on the news or just read something out there, and they're always calling for bottoms for some reason. And I guess it's very confusing for new traders that are out there trying to make a living. What do you think? So what is your advice, your suggestion to the folks that are out there just trying to piecemeal their way through trading here and there with stuff they see on the news?
Yeah, it's just so hard to do, because like I said, these people, I mean, they will never tell you that they're in it. I mean, Goldman Sachs came out this year and said there's a 35% chance we're going to have a recession. Okay. That's like saying they're expecting a recession, because they can't, that's just not what they do. Economists on the sell side and on Wall Street, if there's some economists who are independent and they'll tell you what they really think. But so many, if you work on Wall Street, it's like that is a career killer. If they call for a recession, it doesn't happen, they're out of a job. Okay, so they'll wait until the recession is already and go back in time. And same thing with the Fed. But the Fed has all but told us that they expect a recession. I know that Chairman Powell said last week that he thinks that we could still a chance we see a soft landing. But he has said, and others have said in the Fed publicly, that they say, yes, we may have to push ourselves into a mild recession. You really think the Fed is ever going to say, yep, we're going to push you into a deep recession? First of all, that's not what they want. They don't want that to happen, but they're not stupid. Recessions are normal. Recessions are healthy. We are going to have another recession. If I'm wrong and we don't get it next year, I could be wrong. But to think that the Fed is going to keep us out of recession forever, and even that's their goal, is ridiculous. They know that that's the way capitalism works. Part of it, important part of capitalism, are recessions, are bear markets. Okay, it sets things back and straight. Failure in business is actually an important part of capitalism. It's one thing to avoid in 2020, prevent the entire system from imploding. I understand why they do that. But again, going back to what you're seeing on a regular basis from most of Wall Street is that even if they honestly believe that we are going to recession, they're gonna say no, we'll soft landing, and then when we get to the same thing they did this year about a bear market, they said no, the worst is going to be it's a 5 to 7% pullback. Then when it got down 5 to 7%, they said maybe we'll get a correction, but if we do, it's going to be a very mild one, maybe 10, 11%. When it got down that much, it's like, well, Well, it's a recession. It could get a little bit worse now, but it's definitely not going to be a bear market. Maybe 14 or 15%. They were down 15%. They said, okay, maybe we get a very mild, could we reach, could we, yeah, maybe we'll get down 20%, which is technically a bear market, but that's not going to be anything more than that. And then on and on and on and on. When the next rollover comes, they're going to say the same thing. That's what they're paid to do. So you need to avoid listening to some of these people. I just think you just have to look at the facts. You cannot give steroids to an entire system for as long as they did, and go away from those steroids and think that we can go back to. Too many people on Wall Street think we can go back to what we saw in the second half. I'm sorry, in 2020 and 2021. You have to go back to a new QE program. We might get another QE program, but before we get that, I mean, the Fed, and again, it goes back, you go back and look at every single time the Fed comes in and does a QE, it's when things are really imploding. They don't do it in advance. They wait until things implode, then they put the emergency QE program in. So the stock market is going to be trading at 15 times earnings or less, which every bear market since World War II has had 15 times earnings or less on forward numbers. So if those forward numbers are coming down, that's going to be lower. But the point is, you have to get to 3,400 right now. It's a perfect record. Okay, all bear markets, especially bear markets that have recessions, move into cheap territory. So we got to be very, very careful about spending too much time figuring out, okay, here's another very, very important thing. I should have mentioned this earlier. All these people talk about, hey, guess, maybe we reach peak inflation. Well, first of all, and I've been saying this since the spring, I agreed, we're gonna reach peak inflation in this summer, but it's not gonna come down like it has in the past. And people say, well, look at every bout of inflation we've had since 1980, the early 1980s. Whenever it tops out, it rolls right back down. It's like, yeah, but you're comparing apples to oranges. Every inflation period since the early 1980s has been one that was demand driven. So those higher interest rates did bring inflation down quickly. But you can only, if you compare to apples, and you can only do that by comparing to the late 1970s, very early 1980s, that was a supply-driven inflation. This is just like now. Back then, it was the OPEC oil embargo that created the supply issue. Now we have the Russian oil, the war with Russia, which has food prices and energy prices sky high because of lower supply of food and energy. And then, of course, we do have supply chain issues, which is also a supply issue. So when supply issues come along, inflation always goes a lot higher, which is what it did this time, and always takes a lot longer to come down. And when this one stabilizes, it's going to stabilize higher, because I don't think the war in Russia is going to end anytime soon. Okay, so if that changes, I will definitely I will change my mind very, very quickly. But if inflation is going to stay high, but more importantly, we cannot, what we saw for most of the last dozen years was only brought on because we were on steroids. The markets and the economy were on steroids. The Fed, once things calm down, what they really like to see is let the markets go back to their trade on their own. So that means that, they're going to trade fairly value. That's going to be 16 times earnings, not the 18, 19 times earnings that we had during that steroids area. Weightlifters they can still remain strong after they go off the steroids, because they're still lifting weights all the time. Okay, but they ain't going to be ever as strong as they would be on steroids. And if they can't stay on steroids forever, or they'll die young. Okay, that's what the Fed is doing. Everybody talk about the Fed is trying to beat inflation. Absolutely, that's what they're trying to do. But one of the other things they're trying to do is get us off the steroids. We cannot go on forever, because at some point we create the kind of bubble that once it bursts, we can never recover from. So you have to understand that for those who are saying the Fed will do whatever, it doesn't want to, yes, there's no question they don't want a recession, but they know that we're going to have one. They're telling us that they will risk one. And they are, there's no way they could think that they will ever prevent all recessions from ever happening. That would be irresponsible for them to do it. Okay, so the recession is coming. I strongly believe it's coming. We can go on to, I can show you, I had the Chicago PMI up, and of course the inverted yield curve. When was the last time the yield curve was this inverted? Okay, 1970s. Guess what? What was happening then? A supply-driven inflation environment. That's what we're having now. Stagflation. That's what we're having. Okay, the market is not going to go back to what we saw before, and neither is the economy. The economy is going to do fine, but they're not. It's going to do well. Don't get me wrong. I'm not saying, oh my God, we're all going to be enslaved. This is 30. It's going to be the 1930s all over again, where the economy sucks for 10 years. I'm not saying that. What I'm saying is that there was that liquidity. I mean, just look what's going on. All these these private equity firms, they don't have as much money to put out anymore. So all these startups are nowhere near as many startups. They're just not going to have. There's not enough money to go out. Okay, when you have all that extra liquidity from QE, it has impact across the entire economy. So when you have less of it, fewer companies. Meta was now sitting there going, oh, we don't have all the liquidity anymore. Guess what? We can't spend $10 billion on the metaverse. Okay, we're gonna have to, and we have to concentrate more on our core business. Look at the layoffs that have been announced in the tech area are going to be really big. And you have these guys say, oh, don't worry, the technology is so great that they're still going to be able to find jobs. Well, the best people are, and maybe even the top half. But there's going to be a level of people that aren't, because there's not going to be as many startups, and the big companies are not going to be. They had so much fat they can cut. And they're like, that's good for the stock. When they cut all that fat away, that's going to be good for the stock eventually, but it's not going to be good for employment. Okay. Another thing to talk about, again, this just very quickly here, and then we can start maybe talking about some individual tickers, so people talk about their favorite stocks, or they can talk about ETFs if they're groups they want to talk about. But what's going on Wall Street right now is also telling what's going to happen. I don't know if you've been noticing, but the last week or so, all these firms are coming out now saying that the bonus pools are going to be much smaller than last year, and much smaller than people have been expecting. And now they haven't started layoffs yet, for the most part. A few people said maybe a few layoffs here and there. The other one exception, of course, is Credit Suisse, but because they have major problems there, they are laying off people, big number of people. But everybody else, this is how it works on Wall Street. What they do is they come in a bad year when they know they're going to have layoffs, and they say, oh, we got to have layoffs, but the people have worked a full year, so we can't. We can lay them off now, but we're still going to have to pay them their bonus. They don't legally have to, but it's the right thing to do. And so what they do is they say, okay, we're going to pay much smaller bonuses. Great. So their key people, the most important people they absolutely have to keep, those people get taken care of. Their pay might be down a little bit, but they'll still be taken care of because they need to have them there. And they don't want them to move to another firm. And so they'll take care of those people. And there's another a group of people that they're, okay, well, if they leave, they leave, but we only have so much money to go around. Then a bunch of people, they're going to pay very poorly, hope that they do leave, so they won't have to lay them off. And what they do is they say, okay, if things turn back up at the very beginning of the year, we'll be fine. But it rarely does. And what happens, the big layoffs come in March. Okay. And that's what we're looking for. And we're going to see a lot of layoffs on Wall Street in this March. I'm telling you, February, March, you start hearing a lot of rumors right after the beginning of the year. The layoffs will come then. And then people get a little severance. They won't have to give them a year in bonus, and off they go. And that's going to have an interesting, I don't know how much of an impact that'll have on the markets. Maybe some of the individual firms, their stocks will actually go up because they're cutting costs. But what really shows you that there is so much fat in corporate America right now because of all this excess liquidity. You cannot go from steroids to off steroids without being weaker. But it's the right thing to do. It will make you stronger and healthier over the long term if you get off steroids, because you can't stay on steroids forever. You're going to kill yourself. And that's the same thing would happen with the markets. And so what the Fed is doing is the right thing. The Fed was always going to tighten. If we had never had inflation, the Fed still would have had to tighten, because you can't keep interest rates at zero and money at free. You can't have free money all the time. That creates the kind of bubbles you cannot recover from. Okay, you can't have QE just all the time. They're always going to have to move interest rates up to back to their natural level, whether we had inflation or not. Okay, and they were always going to have to get rid of QE. Okay, they had to get rid of it quicker because of the inflation was much bigger because of the war. But my point is that bear markets, the unwinding of a massive QE program is a process, not an event. Bear markets are a process, not an event. This bear market is got a lot further. What we're living through, the deleveraging and de-risking that has to take place after that massive buildup, It's going to take time. If they did it all at once, we would have a crash and just a complete disaster. Instead, you'll have rallies along the way, which we have had. I think this one's coming to an end. It could end as quickly as next week, or maybe could last to the end of the year. We'll see. But either way, this process has got a long way before it's over. And again, I think it's going to create unbelievable opportunities, and you're going to get things like gold, which everybody's been. I mean, I've been wondering. I haven't been wrong on gold because I didn't say it would break out. But I was wondering why it wasn't. Well, look at gold now. This is gold. This is such a good chart. Let's see here. Boom. Boom. Now it's getting overbought on a near-term basis. So I'm not going to chase it here. But look how this. Again, talk about what we talk on a regular basis. Trend line. Boom. Oop. There it is. Boom. See above that trend line? Not huge break above that trend line. That's very, very bullish. In here, you can see how it formed a nice base. See how is it shape? We made a lower high here, lower low, lower high, lower low, lower high, lower low, lower high. We didn't get a lower low. So all this is really negative, but we didn't get the confirmation. Okay, it wasn't a higher low, but then we made another one here. So here we nice base. Okay, now we followed up that nice base, bumping along that level just above 1600. Now we've made a higher high, following up a nice base with a higher high, now then a higher low. So now we've changed this trend above the trend line. Instead of making lower highs and lower lows, now we're making higher highs and higher lows, and another higher high here. Now we do have to note, see that RSI, that relative strength index, is getting overbought. So it might, and it's bumping up against that 200-day moving average. And then see how that provided really good tough resistance. It couldn't break above it. Finally, it gave up and rolled over. I think what we'll do along here is we'll pull back a little bit, work off this overbought condition, and then break. We break above 1800 any convincing way. All those gold stocks, Barrick Gold, the GLD, which is ETF, these things are going to take off. And you say, well, is it finally because they're going to catch up inflation? Whatever reasons is, I don't know for sure. I have been stumped that because, especially when we realized that the cryptocurrencies weren't working as an inflation hedge, you thought gold would have done better. Well, it didn't. But now it is. And again, not only sit above the 200-day moving average, okay, but it will also, let me get rid of those lines. It will also give it, okay, let's get rid of the 200-day moving average. Let's give it that trend line. But not only will give it a higher high above this one, so it would be higher low and another higher high, but would also take it above the above its August highs. It's a little bit of a stretch, but we could also say, and I'm just going to take this here. Again, these are the types of things we talk about all the time. Let's go here. Okay. Let's get rid of that white line. Boom. Here we are. This is a little bit of a stretch, but you could say that it would be an inverse head and shoulders. Here's the left shoulder, here's the head, but it's kind of a big head. And this is only a very mild shoulder. So it's a bit of a stretch, but either way, it would break above its, give it a higher high above November highs and above a very important high. It's August highs. So that would be very, very important. Maybe a bit of a stretch to say this is an inverse head and shoulders, the neckline of an inverse head and shoulders pattern. But again, above the 200-day moving average, above the trend line, a nice breakout, et cetera, et cetera. Gold really looks like a good play right here. But again, near term, it may have to take a little bit of a breather, whether that's a sideways breather or a pullback, I don't know. It would be just, boy, I'd love to see this thing back down a little bit here. And that's what we're seeing in crude oil. Hold on a second.
Right.
Okay, I'll just do that real quick and then we can move on here. But just the crude oil real quick. Commodity. Let's see how crude oil. Boom. Okay, now it's trying. It looks like it's again. I'm sorry to have so many lines on this chart. Let me get rid of some of them, so it's not quite so busy. Okay, it's coming off an overbought, oversold level, but see how is this? How does low? Same thing, lower highs, lower lows, but here it made a double bottom. This could be a double bottom. We don't know. So we're going to watch. We'll see what happens. OPEC looks like they're going to cut back production. Their announcement today. We'll see how that reacts. Now that can break out here. A nice double bottom and run from here. And also, I'll just say here, remember that MACD that we talked about? MACDs again. Okay. See how it looks like it's just about to make a positive cross, and we need it to be a compelling one. But if it makes that, again, the thing could go higher. And crude oil, and of course the XLE. And the reason why I want to talk about that, the XLE, which is the we call it the ETF for energy stocks. See how it got overbought here? It was testing its old high, but it couldn't. I was like, it's probably not going to break through because it's overbought. Well, guess what? It's worked off some of that overbought condition. No, it hasn't come. It's not oversold, but it's worked off that overbought condition. So maybe now that's enough. Let me just go here. 2020. Boom. Maybe that'll be enough to let this thing break above that old high. See how it has been. I have to use green when it's going to be a breakout. Bang. See how this here? See how we got right up to that? Couldn't break it, couldn't break it. But we've worked off that overbought condition with a sideways correction, kind of a sideways correction. Now, if it can break out from here, those energy stocks going to run. A lot of them are still very inexpensive. I mean, they're not cheap, dirt cheap like they were 2 years ago when I first turned bullish on the group, but they have some potential. So if oil can break out, get a MACD cross. So you see how we're looking at a bunch of different things and how to play. We're also going to be looking at the dollar. Again, I started to be jumping around here because I get so excited about these things. But the dollar, if the dollar breaks down, see it's trying to break down from a 200-day moving average, but it's oversold. But just again, next week's going to be a big one. If the dollar breaks down further, oil breaks out. My feeling is we'll probably see the dollar bounce back a little bit. We'll see the oil pull back a little bit. We'll have a week or so, and then the dollar will resume its decline. And commodity and there's an inverse correlation between commodities and the dollar. And oil and other commodities will rally. So will gold, and there'll be one of the great trades. We'll probably start doing at the beginning, but before the end of the year, and really let it run into next year. So I kind of got caught up on a couple of things there, but
yeah, no worries, man. Yeah, and just for everybody here to kind of be aware, we're going to be wrapping up here in about maybe 15 minutes or so. So if you do want to sign up to follow up more with Matt, we're posting the link on the chat. It has everything, 5+ daily trades in the live room, which is Monday to Friday, 8 a.m. till 5 p.m. Eastern. You get 15+ trade alerts through our member meetings that we have Monday, Tuesday, Wednesday, and Thursday. Separately, you will get 6 stock swing trade alerts per month by email, and ongoing mentorship, ongoing market education, and you get the real education. You don't get that watered down spin version you get on the news, okay? You get it straight as it is. So Matt, let's take over. Let's go over a couple tickers. Did you say everything you wanted to say about Tesla, or do you still have a couple thoughts there?
No, I just, we'll see. Tesla's going to be one that's going to be very interesting. We've had some real nice trades in this year, so I think we're set there. But we will be talking about that on Monday. I guarantee you. Tomorrow, that is. I guarantee it, because again, it's getting poised for some. And again, it's a volatile stock, and therefore it's one you always want to follow. You always want to be trading, even when the market comes down a little bit. The stock's a volatile stock, so it's. We're kind of. I'm leaning more towards the negative side, but I'm going to see how they react to any more news this week.
Okay, I want to give a quick shout out here to Shores L Shoresman. Welcome to the family here. He just signed up here recently here, so a big shout out. Let's go. New family member. Again, folks, keep it. This is a family, okay? This is not like some pump and dump chat room. Everybody here is a real person, a real human being, a verified trader. There's no fake bots, fake like Reddit or Wall Street Bets, any of that stuff. And also, by the way, if you didn't have a chance to congratulate Matt on his 40th year anniversary in Wall Street, today's your chance, Matt. So for everybody, for you to know, you're basically, you're joining the chat room. You're joining a well-seasoned veteran in Wall Street, somebody that knows his way around, has been around. And look, you got to respect that. That's just really what you want. Can you get it all the times? No, right? But if you could, that would be the perfect scenario. Another big shout out here to the newest member, GM. Let's go ahead and give him, whatever it is. Let's give GM there a warm welcome. Let's go.
Yeah. Welcome. Now, that's what I say is that for those who care, tomorrow, I'm not sure exactly what time. It's going to be sometime around the opening of the stock market. I say about 9:20 probably. I'll be on the Yahoo Finance network tomorrow at about 9:20, right around the opening. Just FYI, if people want to check that out. But again, I'm on CNBC and Bloomberg on a very regular basis, and as you can see right here. Put them here is, again, here are the times that you can see I'm very regularly quoted in Bloomberg. This is all the times I've been quoted in the last month or so, just on Bloomberg, much other areas like the New York Times and the Wall Street Journal and Forbes, etc. So anyway, so it's 40 years, but one of the things is, a lot of people 40 years kind of lose their enthusiasm. I haven't at all. I'm still very passionate. I've kept up with the things, and it's here's this thing right down here with the JP Morgan, B of A, Citi, all / banker bonuses, et cetera, et cetera. It's gonna be a tough year on Wall Street. It's gonna be tough. Next 6 months gonna be tough for Wall Street. But anyway, so if there's some names that people want to talk about, I'd be more than happy to throw some tickers to Rodrigo, and he can throw them at me, and we'll then before we wrap things up, we'll look at a couple of the most popular names. Tesla, of course, is a big one. Another one lately, of course, has been Alibaba. So while you're putting those in there, I'll just talk about Alibaba really quickly. The one thing is up at here. Here's again, one of the key things we got to remember. This could be a great stock, especially if we see a further breakout. But see how it's bumping up against again that 200-day moving average. See how it got right up to it, or very close to it there, and then again here in June and July, got close to it in August. Couldn't break above it. Can it break above it this time? Maybe, but probably has to pull back. See how it's overbought on its RSI chart. Let's see here, equity. It's Bollinger. This is what's called the Bollinger Bands chart, and this tells you when a stock gets more than 2 standard deviations above its 20-day moving average. You can see when it gets above to get to that top line. See the middle line. I'm sorry, that grayish line. That's the 20-day moving average. The purple is when it gets 2 standard deviations above it. I'm sorry, my dog keeps whacking my feet here. And the green line is 2 standard deviations below it. See, every time it's gotten up to that line, sold off here, sold off here. Here it stayed up for a little bit, but then sold off, sold off, sold off, sold off. Excuse me. So it looks like it's ready to pull. Between that and the RSI, the relative strength index, getting overbought, tells me the stock, no matter where it's going on a longer term basis, when you get overbought and test a key resistance level, in this case, the 200-day moving average, that probably means it's going to take at least a breather here. So one thing for sure, I would not be chasing Alibaba on this. So we'll see what happens. Of course, China, they can manipulate their market. Maybe it can break out even at an overbought stage. But right now, so I'm not saying let's back up the truck. Let's start buying puts in a big way. But one I'll be looking at to buy puts this week is Alibaba. And it just, it's a name that everybody loved to trade for a while there, that everybody was afraid of it, and rightfully so, for probably almost the last year, certainly the last 6 months. Now we got a little bit more trust in what's going on, or at least more confidence. Trust is the wrong word, but because I don't trust China's government. But anyway, so you can see, again, you can see a picture's worth 1,000 words. And I understand that that the reopening of China would be very bullish, but we have to be cognizant of these technicals. And so what I'm saying is that maybe we buy some puts, but it's going to be short-lived. And then if it comes back in and we get more signs that they are going to reopen, then we completely flip the trade. Maybe not that day. We don't necessarily sell the puts one day and buy the calls the same day. Maybe we wait a few days, let it, whatever it might be. But if this thing breaks above that 200-day moving average, especially if it can do it after it works off the overbought condition, it could really, really run. So this is a great potential on both sides. We want to be able to take advantages of both sides of the marketplace, and sometimes both sides of the marketplace in the same stock or the same index. So are there any other names, Rodrigo, that we can want to cover?
Yeah. We got the hugely controversial Apple company.
Well, the thing is, it's so important to note that there's always a big difference between a company and a stock. And what the hell are you talking about? What I'm talking about is that sometimes the stocks of really good companies are not good stocks because they become way too overvalued. And it's way too overbought, technically. Same thing, you can have very mediocre companies whose stocks have become so cheap that they become great stocks, even though the company's pretty mediocre. Now, sometimes, of course, you have real lousy companies that are about to go out of business. You avoid those, but you have mediocre companies, and they could be really good stocks. In this case, I worry about Apple. This is a great company. That the stock is still a concern to me. Now, let's move it back a little bit. I just want to back up in terms of time. We go back further in time. Okay. Now, okay. So what we're seeing right here is again, a couple of things you have to worry about is, of course, China. Are they going to reopen? Great. Is that how bad or good is that really going to be? Because there's no question we are seeing a slowdown in demand in the iPhones and a lot of different things for both Tesla and for Apple. Not forget about the being able to shoot. Forget about whether they can. They're making. They can't. Well, we can't deliver it. Supply chain issues. Yeah, that's a problem. But the other problem is demand. Demand for Teslas is down in China, and I think that's why I think that there's a good chance Tesla will eventually go to $150. You can see this is what we call that's a symmetrical triangle pattern. Now it's near the top end of that pattern, but we think that whichever way it breaks out of this pattern is going to be important. But you say, well, Apple Computer is a great company, and you say, well, it's trading at 23 times earnings. That's it's a premium to the market. But Apple's they should always be. I mean, that's still really cheap, right? Well, actually, it's not, and I'll show you right here. Bang, equity RSI. Price earnings. Okay, you can see it's trading at 23 times earnings. I think that's really good. But look at it. Look how you go back. Well, this is the price earnings going. This is just the forward price earnings. But that's the only time it's been this high. Okay, was when during all that big QE program. It started right here. It jumped up and it stayed there. I'm going to go. I can't go back further, but I will do it real quickly. Let's go. Price earnings. Okay, this is stated earnings. So you go back. See how? Look at this. You go back a decade. Look how fairly valued is way down. Is below 20. This stock has got to go below 20. And you see and say, well, it's such a great company that it's a flight to quality. Yes, but every single bear market and every single, even just deep corrections of more than 15%, Apple has never held up. It's when people finally throw in the towel on Apple, that's when the stock market has finally made its bottom. And so we want to see this stock get cheap and get down there. Now, again, and you can just look at here, going back to the
which I think we're still watching the Apple chart. That's the one you wanted to show?
I'm sorry, buddy. Here, hold on a second here.
Oh, good.
That was the Apple. That was the Apple chart, but it was the Apple price earnings ratio chart. So let me pull up the stock. And we'll go. Let's just go back a little ways. Oops. Okay. Now, look at this here. So forget about these moving averages. You can see that the RSI, relative strength index, is quite neutral. So we don't have it doesn't give us a good picture. But one thing I'm worried about is that, again, stock's not expensive. Great company. And boy, I kind of, for my long-term positions, I hope the stock gets knocked down, because guess what? It's going to be a great buying opportunity. But see how the stock, it's trying like hell to hold that trend line going back to the pandemic lows. It keeps dipping below it, and it's been able to hold. But if it finally breaks down, that's going to be a problem. It's also forming. Oops. There we go. Sorry. Take a second. There we go. You can see it's kind of forming a head and shoulders pattern. We'll go to yellow here. Okay, kind of through here. Let me get rid of that other line. Whoops. again, it's a bit of a stretch, but there's the left shoulder, head, right shoulder. You break below that, you got big problems. So I'm worried about this stock. And you can even see that, again, if it can break up here, the key short term, if it can break above 150, it's if any kind of decline that I've been talking about, that washout decline, is going to happen next year. If it can break above 150, and again, it can't be just 151 or 150 and a half. It's got to be, a significant breakout. Then you get it's going to be much more bullish, but I think only on a short-term basis, because the stock has got to get cheaper. Number one, and in every bear market, this stock is dropped below 20 times forward earnings, and we're not really that close to that yet. We still have to drop further. So love the company. The stock, I'm a little bit more concerned about, and it kind of reminds me of Microsoft, which of course is our favorite story, right, Rodrigo? Where this time last year, where we
I don't know.
Go ahead.
Are you using I think you have a different monitor there, just to make sure we're using the same, the one you're showing there to the one that we're seeing here is the Apple one with like a whole bunch of rainbow colors there.
Let's just see here.
Relative strength index.
Can you see Microsoft now?
No, what we see is Apple US equity. So Apple US equity on your Bloomberg with the relative strength index.
So you're not seeing the change in my?
No, we're not. I mean, we're just looking at the Apple one. But if there's some technical issue, that's fine. We can just roll with it.
I don't know, because I pulled that. I've definitely moved on from that. Is it still? Is it not sharing my? I don't know what to do.
No, we're only seeing the Apple. But I mean, it's fine, man. I mean, I'm sure people here could follow, with their own charts.
Well, yeah. Sorry. Well, just to say on Microsoft is that Microsoft is another one. Is a great company. The stock's not cheap yet, but last year, it's something I've talked about a million times. The CEO, do what the smart money's doing. The smart money is Satya Nadella, who's the CEO, almost exactly this time last year sold $374 million of his own Microsoft stock. And I told people, get out of Microsoft. Not because it's a bad company, because the stock is way over, is very expensive, and the CEO does not sell 2/3 of his holdings in a stock unless he thinks it's going to go down a lot and stay down for a while. And that's exactly what happened. They saved himself $125 million by selling that stock. And he got more at the end of that last year, and he'll get more at the end of this year. And he did nothing wrong. He is a great CEO. It's an unbelievable job. But he saw what the Fed was going to do. He saw that his stock was overvalued, and he dumped. And now what do we have now? What do we have going on in the marketplace right now? We have Jeff Bezos saying batten down the hatches. We have Jamie Dimon saying hurricanes coming. We have Paul Tudor Jones worried about bear markets. And you have Carl Icahn saying we're going to have a recession or worse. Okay, things like that. So when the smart money is doing something and saying things, I mean, that's my favorite. One of my favorite ones is Jamie Dimon in 2016. I've said this a million times, but 2016 markets were going down. The bank stocks were getting hit. The market was down about 15%. Everybody said, "Oh my gosh, are we having the bank's in trouble again?" And Jamie Dimon came out and said, "No, everything's fine. In fact, I'm going to spend $26 million of my own money to buy JP Morgan stock." And he did. That stock bottomed that day and rallied for the next 18 months, as did the stock market. The whole entire stock market bottomed that day and rallied for the next 18 months. This time around in the May, he said the market was down 15%. And he didn't say, "I'm buying back the stock." He said, "The hurricane's coming. You better look out." And then in the fall, he said he doubled down on that call. And is there anybody who has a better look at what's going on in the world than him, with all the business, he's JP Morgan is the biggest bank in the world with business ties to everything. When the smart guys are doing and saying things, again, if he was saying I'm really worried but buying his own stock, he'd say let's see what he does. He ain't buying his own stock. Okay, so we need to be worried about what's going on. The smart people are very cautious, and it's exactly what happened last year with Mr. Nadella, who sold the stock right at the right time and has saved himself a fortune. So again, I'm sorry about the technical issues. I don't know exactly what happened.
That's fine. We're gonna have a little chat with Zoom. Okay, but I mean that's a clear short. It's been a short since we've been doing these webinars. Everybody knows it's been giving us issues.
Yeah.
So, hey, man, this has been a great session. It's never a boring session with you, Matt. I mean, you are one of the most passionate folks out there in Wall Street, I'd say, and this is something you've been doing, since you were a young buck out there, right? And now it's, it's great that you are able to help the next generation of traders around the world. That's pretty great, man.
Well, I really enjoyed it. I love it. Thank you for those who for joining up, and welcome to the site. We'll talk to you again tomorrow. And for others, I hope you consider. I just think trading alone is a very, very difficult thing to do. And we have a great group, a great team of people that we all work together to help profit. Profit in a time it's very tough to profit. And I think that we do have a lot of things that we still have to work through. This is a process. This bear market's a process. It's going to take longer, and things could change. And if they do, believe me, I will change. If the war, if the sanctions are lifted off of Russia, it's going to be a big change to the way I view inflation and other things. So, the last thing you're going to call me is a perma bear, like some people are. They're always yelling fire in a theater. I'm not doing that. I'm just telling you what's really going on in the world right now. You can't go from massive steroids to zero steroids and expect to stay at the same strength. Instead, you want to get. It takes time to get completely healthy. That's what we're doing here. Let's do it together. It's going to be. Fun. It's not really. It's a lot of work, but it's really exciting. It is fun. We have a lot of fun. Busting on each other every once in a while, but in the chat room. But for the most part, we really, we take things very, very seriously, and the whole idea is to make money and to keep our heads around us when other people are losing theirs, and make some make our investment decisions and our trading decisions rather than guesses, and profit from this. For this this period of volatility, which I think is going to be with us for a while. So good luck to everybody, and thanks a lot, Rodrigo. We'll talk to you real soon, and we'll see. Boy, the next couple of weeks are going to be really interesting in either direction. I think next year is going to be we're going to have some real tough times, and for those who are working with a team of people, I think they're going to have a better chance of profiting. So anyway, good luck to everybody.
Hey, whoa, hold on 1 second, man. Hold on 1 second, man. Just gotta make it official. Hold up. All right, let's go. Matt Maley in the house. Let's go, baby. All right, dude.
Thanks, Rodrigo. We'll talk to you real soon, buddy. And I hope everybody stay on here, and he can show you the chat room a little bit more.
Okay. All right, folks. Matt Maley, there you go. Probably the smartest man I know there in Wall Street. He's going to help you guys a lot, not just with trading, but also he's going to help you with a bunch of education, a bunch of setups, things like that. Matt, I'll see you in the chat room, okay?
Sounds great, buddy. We'll talk to you soon.
All right, folks. Now, I want to show you really quick here before I bounce here and I finish this thing. For all the people that did sign up, I want to show you this stuff, all right? Give me a minute. Oops. All right. GM, welcome to the family, of course. Now, I want to show you really quick here what's going on. In this live room, right now, there's about 100 people there. What are they doing there? I don't know, because it's Sunday. Probably the same thing I'm doing here with you, talking about stocks, trade ideas, things like that. But we have 100 people live here on a Sunday regularly. This is also popping every day. Strategic Solutions, what's up, dude? What's going on? On the left side, for everybody that joined, just really quick, just pay attention here really quick, all right? So you know what you're looking for. You're going to get into this blue chat room. Remember, there's a blue panel here on the left. You select stock picks. That's Matt Maley. And then there's two channels, okay? One of them is Inner Circle Chat. That's where everybody's postings. You can see it's a whole jambalaya salad of ideas and trade setups and opinions about markets and different parts of the world, different states. Someone here is talking about jobs in Alaska. You can look into that. Here we got a picture of the New York Times, the Iran-Contra. I remember about that actually, because they did something with Nicaragua there. I don't even know why that's even posted there. I guess it's maybe the soccer game. No idea. But you can see there's a bunch of stuff here. Let's see. Oh, it seems it's approved. Oil price, $60. Okay. So folks, this is it's a plethora of resources for traders where you can not only learn from Matt, but you're also going to be learning from different traders You're going to be learning from different resources that everybody's sharing and analyzing and breaking down together, right? More importantly, this is a two-way street where you can talk to Matt directly, where you can talk to other members as well. You can private message other members, and they can private message you as well. Separately, on the other channel, you have Matt's important messages. That's where only Matt can post. The reason why I made a suggestion to the developers to make that additional chat room where only Matt can post is so that you guys don't have a hard time finding Matt's trades, so that you don't have to scroll for 15, 20 minutes to find what's the last thing he said and what's the last trade he made. With this new format that we made here, keep in mind, this is a proprietary platform that we have. This is not some cheap Discord, no bots. Everybody here is a real human being. I've signed up like 95% of the people that are in that chat room. They're great individuals. Everybody there is striving to make money, to learn, to become a better trader, right? Do we have fun there in the chat room? Of course, right? But that's just part of life. You want to have a little bit of fun when you're doing these things, especially in high intensity, environments of work. So as an example here, you can see that this is really how the trades are set up. And I'm just picking random stuff to show you really like how the setups are made. I'm going to sell the TQQQ October 28th, $22 puts I bought yesterday. So that's your sell alert. If that is not clear as day for you, nothing else will. He's literally telling you he's selling the contract, which contract that he bought, right? He's selling it, and he's telling you it's up 100%. And then he says, however, I reserve the right to buy them back at any time today, including a few minutes from now. So if you do have the time and the tendency to trade and really if you want to make as much money as you can, you have to be, in the markets as much as you can time-wise, but more importantly, having a mentor educator that can give you those trades, that can tell you, hey, buy here, sell here, right? That's what it is. It's not like a lot of other people that are maybe just like, hey, I'm feeling bullish today, or I'm feeling bearish today. It's really more like, I'm bullish and this is what I'm buying. This is the specific contract that I'm going to look into and purchase, and tell you, hey, I just purchased it. It's a small position. Or, hey, I'm trying to purchase this other one. It's a medium position. I'm adding into it. Now it's a full size position. Therefore, again, and I don't want any of you guys going all in on any of these trades. Can you make some nasty money doing that? Yes, but you can also lose everything. So don't do it. I know some people that have been, that they've done that. Even though the chat room is up 300% since we started it last year, I know people individually in this chat room that are up thousands and thousands of percent since they started. Several people double, triple their account within a week or 2 weeks of joining. We are volatility traders. We're not buying and holding like Warren Buffett for 60, 70 years. That's not what we're doing here. We're trading the volatility. Whenever there's a Fed speech, we're on it. Whenever there's some sort of craziness in the market, we're on it, because that's where the big money's made, in these quick moves, right? You're in and out, in and out. Now you can still ask Matt, what are the top 5 stocks that you would buy and hold forever, or for your kids' college fund, anything like that. He is the one person that you do want to ask any question that you have about the stock market, because this man has been back and forth a million times, on things that you wouldn't even know about when it comes to Wall Street stuff. When you've done anything for 40 years, I mean, you become a top G in that, and like no questions asked. Fiber optic internet connection helps. Strategic Solutions, are you going to be my private internet guy? Okay. All right, folks. So I'm just going to go over a couple more questions here, because I do have to wrap things up here for a bit. All right. How come we only have a yearly and a lifetime? Paul, I'll see you later, dude. Okay. So I'm posting the details there on the Zoom chat. And then I'm also going to, everybody on YouTube, yo, Richard's in the house. What's up, dude? I see everybody there on YouTube getting lit. What's going on? We talk about natural gas. We talk about all that sort of stuff there. Richard, big shout out to Richard. I believe Richard is a member of the chat room. Everybody, I hope you're having a great weekend. Hope you have a great week. Deborah, good to see you. Hope you're feeling better. Carlos, I guess really when it comes to the type of trading we do, sometimes we do hedge. I guess it really wouldn't make any sense to really talk about rates. What the only thing that really matters at the end of the day is P&L, baby. Are you up and are you down, and by how much? So chat room's up over 300% since we started last year. And Matt Maley, I mean, he's more than verified. You can go check him out. Just Google his name. You'll see what I'm talking about. The other thing, you can put up sound alerts here. Okay. If you see these bells are yellow. When I click that, all right, and I'm gonna click this, and then it's not yellow. So when it's yellow, that means that the sound alerts are on. Another new thing is that we are launching push notifications. These are already kind of working. I'm getting them on my phone. If you do want to get them, just download the app Benzinga on the Play Store, whatever you got, Apple Store, I don't know, and just download Benzinga, log in with your credentials from Benzinga, and you're going to get those push notifications, and you're going to get other stuff too, like, news, things like that. Great for traders. Benzinga is the home of news. We got like 25-30 million readers like a month on our website. Okay, like we do more than just these chat rooms. We also work with brokerages where our news goes on their platform, right? And you guys are the spoiled folks that get all the benefits of what we do here at Benzinga injected in these chat rooms, right? And we're going to add news feeds in here. You got no idea what's coming for this chat room. Okay. These are just rumors I'm hearing on the hallways of Benzinga. That's it. But there's a lot of things coming out here for the chat members. VTech, I will see you soon, brother. Big shout out to everybody. Thanks for being here. If you do have questions and you want to join, make sure to at least email me so I can kind of hook you up before the price does go back up to 2,500. The 1997 is just till midnight. So make sure that you sign up, and also email me if you got questions on that. Thanks a lot for being here, guys. I appreciate your time, your participation, the fact that you want to learn and become a better trader. If you do have questions, you can reach out at any point. I have a real job here at Benzinga. I don't just come here and talk. I also have a real job where I talk with users on how to improve the chat room, how to find the right subscription for them, all that stuff. I'm a trader myself, so I'm very empathetic to what you're going through and what you might go through. So I'm not a financial advisor, obviously, but I'm a trader just like you. And that's really where I'm coming from. So what is your email address? I'm going to post it here in the chat. 1 second. Okay, folks. The lifetime FACO, 1 second. So if you do want the lifetime, you have to send me an email. Okay, you have to send me an email if you want the lifetime. I'll put my email there again. Just send me a basic question. How much is the lifetime? Something like that. And I'll get back to you guys with that. So this is the chat room. Just wanted to show you guys really quick. You will have access to a whole bunch of other stuff here. And I'm just going to do this really quick here because I do got to roll out. Okay. All right. Stock picks. So this is the meeting that we have 3 times a week. Okay. This is audio only. Okay. Just to show you a little bit. There's no video, so don't expect the video or nothing like that. Might start a little bit later. I got too many things open. Where is this?
Okay. Sorry, I'm I tend to agree with that.
Okay.
Again,
all right. Just wanted to show you there that the classes are there. Now, I mean, not the classes, but these are the weekly calls you're going to have 3 times a week right here. That's where you see video library. Okay. That's where you go. You see, I click video library. That's where I'm at. Monday, Wednesday, Friday, 12 to 1 p.m. Eastern. Then you have does this annual Benzinga include only Matt Maley? This is only Matt Maley. We're here only representing the top #1 person, Matt Maley. these are some of the trade alerts, right? Starter, remember you guys are getting, remember I told you email trade alerts? You're going to get them by email, but you have a portal as well where you can watch them. These are additional trade alerts that I told you you're going to get, that I hooked you up with. You got a platform for it. You also get them by email. Okay. Boom. Next. All right. We went over these. Yo, let's get rid of this annoying pop-up there. All right. Then you have the Tuesday sessions. Every Tuesday, remember, you guys will have access to this call, right? This is a little bit of a different call from the ones that you will be on Monday, Wednesday, Friday, because this is pretty much only accessible for the chat members. We are doing the great, large, humongous exception of including it today in this, right? So you can see the recordings are here, right? These calls sometimes will go for 34 minutes, 40 minutes, an hour, 20 minutes. It usually depends. If the markets are, if there's nothing going on in the markets and we're just waiting for a specific event, I mean, we can only talk so much about an event. And as you saw today, just 10 minutes with Matt is worth an entire like 9 to 5 news program. You know, only that without the BS opinions and the sprinkling and the spins that they give him. You get you get it as it is with Matt. He doesn't sprinkle anything, which is good as a retail trader. You don't want people pulling your hair and kind of pulling you here and there. You just want the facts, and you want to know what has happened before. I don't care what you think will happen, what typically happens and all that stuff. Mishra, when does the chat room open in the morning? 8 a.m. till 5 p.m. If you have any questions on the chat room, just email me, because we're going to be shutting this down in a bit. Virginia, Vijindi. So yeah, these are the other things that it includes. It includes everything with Matt. It's only available till midnight. So I think that runs, that kind of covers everything, folks. Let's see if I got to do a couple more shout outs before I finish this. And thank you everybody for being here. I know it's a Sunday. I mean, I work every Sunday, and it's to not be the only one here that's interested in doing that, right? Because you guys care about your financial success, your economic success as a trader. And that's great. You know, I'm glad that I'm able to help with that. Mishra, can I use the same idea? Yeah, man, you can use the same idea. Just use the link to join there and email me if you got any questions. All right. I got to send a big shout out. Terry, Joey, welcome, welcome, welcome. Let's go. All right. So that does it here for the day, folks. If you do want to trade with Matt the whole day, Monday to Friday, attend those weekly calls that we do Monday, Tuesday, Wednesday, and Thursday. And Friday, right? 4 days out of the week, you have a call with a chief market strategist, 40 years in Wall Street. That's longer than many of you, including myself, have been alive. So I would say take the chance, right? I mean, you're taking the chance with somebody who's well worth it, I'd say. But more importantly, more than verified. You know, just do a quick Google search, Matt Maley. You'll see what I'm talking about. All right, folks. Faco, no worries. If you guys have more questions, just send me an email. You know, that's perfectly fine. I'm going to put it again there just in case you guys have questions. And I'm going to recap the deal one more time. All right. You get 5 daily trade alerts in the trading room, minimum 5 Monday. And that live trading room is open Monday to Friday, 8 a.m. till 5 p.m. Eastern. Then you get 15 trade alerts per month via the member meetings that I went over, that you have Monday, Tuesday, Wednesday, and Thursday. And you know what? It's actually Friday. I messed up. I put Thursday there. So Monday, Tuesday, Wednesday, and Friday. That's when the calls are. Then you will get 6 trade alerts per month by email. I showed you some of the trade alerts a little while ago. That's where you can find those, but you'll get emails for those as well. You can sign up for text message alerts for free at no cost. Damn, that sounds so good, right? So and this is just for the email trade alerts. The chat room has push notifications, which is great that I can say that. I've been waiting for this moment, and I'm getting those alerts on my phone. I'm not making every trade because I'm busy working, but realistically, you know, I could. Realistically, I could now. Even if you have a full-time job, part-time job, even it doesn't matter. As long as you have the internet and your phone where you can make the trade, you're good to go. Okay. Next, yes, you will get, you do get customer support. A lot of places, a lot of brokerages, it takes like 50 hours to talk to somebody. Here, we actually have real people. We don't hire call centers in other parts of the world. Everybody is here, a trader. We're here to help you out. So we do have that human touch, that support that you need. And again, you can just email me if you got any questions. As a trader myself, I want you to be successful. My success depends on your success, right? Our success as a company depends on your success, right? My success doesn't depend on a sponsorship from, any multi-billion-dollar hedge fund, right? For me to consider myself successful in this role, and what I've done here with the chat rooms is if you are able to be a profitable, successful trader and you can improve your trading, because that's who my sponsor is, the little guy, right? Just a trader like you and me, helping out each other, trade better, become better traders with people like Matt Maley. So, all right, I missed a couple of questions. Yuan Yao, thanks so much. Get in the trading room. I'll get in there, bro. Don't worry. I would like to get alerts. Hey, send me an email, guys. What did I tell you? Send me an email. Come on, say it. Matt Maley's the man. He is the man, strategic. He's the top man. All right. Okay, folks, that does it. Thanks a lot for being here. I appreciate you guys. Keep working hard. Keep hustling out there. It pays off in the end. So keep working hard, folks. Matt Maley is going to keep doing it for you. We're going to keep giving you these sessions, putting all the work here, organizing all this platform so that you're able to succeed as a trader. Thanks a lot. I appreciate you guys. Appreciate your participation, your attendance. Have a great weekend. Stay safe. And I will see you guys in the chat room tomorrow. Okay? All right, folks.